Good afternoon, everyone. Good afternoon to everyone joining us from Africa and Europe. And good morning to all our attendees from US and from the US and Latin America. Good evening to those of you joining us from Asia. My name is Nosa Omosi. I'm the Nigeria Country Manager for the Catalyst Fund, and I will be your moderator for this event, and I'll be supported by the panel moderators. Thank you so much. We are so delighted to have you joining us today for FinTech in Focus, which promises to be an exciting and interesting conversation. I would ask us at this point to please feel free to use the chat window. Please let us know your name, which organization you represent, and where you are joining us from. From there, I will be running us a bit through the agenda so that we know what is lined up and what is in store for us today. So Shivani, if you please share the agenda. Thank you. Great. So for today, which is day one of our FinTech in Focus event, we will be having a welcome and an introduction by Catalyst Fund and by GreenHouse Capital. The introduction by Catalyst Fund will be done by Mylis Carraro, the director of Catalyst Fund, and by Bumi Akinyemiju, who is the founder of the Venture Garden Group, as well as GreenHouse Capital. We will then have opening remarks by Lami Adekola of the British High Commission. We will have a keynote by Ido Som of TLCom, and then we will have our first session, which is Opportunity in Crisis, Digitizing SMEs for Post-COVID Resilience and Recovery. This session will be led by Catalyst Fund, followed by the second session, which will be Rethinking the Portfolio by GreenHouse Capital. And after that, we will have our closing remarks. Next slide, please. And please, I will also encourage us to get social. These are the hashtags for the day. The hashtags are hashtag inclusive fintech, hashtag emerging markets. And please feel free to tweet at Catalyst Fund at CF_BFA and tweet at GreenHouse Capital at GreenHouseCap_. So thank you very much for joining us once again. And at this point, I will hand over to the director of the Catalyst Fund, Mylis, to say her welcome remarks. Thank you so much.
Thank you, Nosa, for the great introduction and housekeeping. Great to see the room filling up. I think we're at about 66 or so attendees already, and hopefully more will join us soon as well. So we're very excited to be here and welcoming you to this event, FinTech in Future, Building a Post-Crisis, FinTech in Focus, sorry, Building a Post-Crisis Future, brought to you by Catalyst Fund and GreenHouse Capital. For those of you who do not know us well, Catalyst Fund is a global accelerator for early stage inclusive FinTech startups in emerging markets. It was founded about 4 years ago with support from JP Morgan and the Gates Foundation. And today we're supported by UK Aid as well to help us scale and expand our mission across our key markets. And one of them is Nigeria, which is the host of today's event. And our mission is really to help entrepreneurs in our key markets, so the Kenya, Nigeria, South Africa, India, and Mexico, design what we call accessible, affordable, and appropriate digital financial solutions for the world's 3 billion underserved individuals that are excluded from the formal financial system. And so far, since we've begun, we've supported already 37 entrepreneurs through a combination of catalytic capital, so very early stage grants, as well as venture building support. So our differentiator for us is to really combine capital with the talent of emerging market and fintech experts from our team that really roll up their sleeves and work alongside the entrepreneurs to make sure that these solutions are successful and can scale. And then finally, also allowing entrepreneurs to access investors and partners and ecosystem partners that can also support their journey to scale, which, as we know, it does take more than one player always, and ecosystem connections are extremely important. So I think also we should address probably the elephant in the room, which is called the COVID-19 pandemic. And we know that it has had unequal effects across countries and across segments of the population. And BFA Global, our firm, is actually done studies through dipstick surveys and scenario exercises to understand that impact for small businesses, for individuals, whether it's women or migrants. And what we found is that those that have been most severely affected are the vulnerable, excluded individuals at the margins, those living at the cusp, those waiting for more jobs, the small business without a safety net, women, refugees that do not have the resilience mechanisms to cope. And we believe that fintech and tech innovation really more broadly, whether it's health tech or e-commerce or digital tools for SMEs, have a huge role to play in leading us to an inclusive economic recovery through solutions that do meet these needs and improve their resilience. But obviously they can't do it alone. So this is why we're really proud to be partnering today with GreenHouse Capital to facilitate this dialogue that does convene investors, startup innovators, corporates, and many other ecosystem partners as well to build a better future for all. And I think the conversation really needs to start today. And so with that, I will pass the mic to Bunmi, the founder of Venture Garden Group and GreenHouse Capital.
Hi, Melis, and thank you for that great introduction. It's a pleasure to be here today, and I hope everybody can hear me okay. Just like Melis said, I think the topic of today is really, really timely. Fintech in focus, building a post-crisis future, especially on the continent. I believe it's exciting times, what we're seeing globally and what we're also seeing on the continent right now. Is it an opportunity? Is it a crisis? So I think this is, very, very interesting times. If you can please advance the slide. So GreenHouse Capital was started a few years ago, about 4 years ago or so, out of a need. We, the founders of Venture Garden Group, moved back from the US into the continent almost 10 years ago. And as entrepreneurs, we went through a lot. How do you raise capital? How do you start a business? How do you grow the business? How do you walk through the regulatory hurdles? How do you build relationships? How do you figure out legal, finance, and all those different things? And very, very quickly, it was clear to us that there was this missing middle. To find $5,000, $50,000, $20,000 in capital from angel investors or family, friends, and fools was quite easy. To find capital of about, let's say, $10 million or $20 million from private equity on the continent was quite easy, believe it or not. But somewhere in the middle, between that, $100,000 to $250,000 or $500,000, wide open, a gap, a big gap. And that was what inspired us to create GreenHouse Capital. So our journey of being an entrepreneur, starting different businesses under the Venture Garden Group that are all fintech-enabled B2B companies, gave us a lot of experience and showed us that there's a massive, massive gap on the continent. So because of that, GreenHouse Capital was born. And since then, we've made about 27 or 28 or so investments, mostly fintech and fintech-enabled companies. So companies that you may be aware of, most of them are in Nigeria, a few in Kenya, Ghana, but you might be familiar with Source Energy, which is sort of fintech-enabled renewable energy company. You may be familiar with Max.ng, which is fintech-enabled ride sharing. You may be familiar with AppZone, which is sort of fintech-enabled core banking application for the poor. You may be familiar with a company like Migo, formerly called Minds.io, that's doing micro lending using machine learning and so on and so forth. So you may be familiar with Busha, which is the #1 crypto exchange in Nigeria. So those are the types of companies that we invest in, and it's been quite a journey in doing that. one of our foundational philosophies in making all these investments is obviously first to fill that middle, right? The second part is how can we help these businesses actually go to market? How do we roll up our sleeves? And I think this is really where our philosophy and that of the Catalyst Fund is very synergistic, right? We believe that technology is going to catalyze the growth of the continent. And we believe that startups and strong entrepreneurs are going to be the fulcrum of this exponential transformation that we expect on the continent. But then it's also beyond cash. The second pillar is plus. We call our model Cash Plus. And that plus is all about helping you go to market, helping you walk through regulatory hurdles and so on and so forth. So I look forward to an awesome day today where we can actually get to talk to the awesome panels that we have lined up for today. And thanks, Nosa. Thanks, Melis, for putting this together. I look forward to a great show today. And welcome to all of our guests.
Okay, thank you very much, Mylis, and thank you, Bumi, for those great opening remarks. So now we will have some opening comments, and they will be brought to us by Lami Adekola, who is the Director for Financial and Professional Services for Africa at the Department for International Trade at the British High Commission in Lagos. So Lami, over to you.
Hi, Nosa. Thank you very much for putting together this excellent event. My name is Lami Adekola, and I work with the Department for International Trade. And the Department of International Trade is the UK government's department that focuses on boosting trade and investments between UK, in our case, and Nigeria. But we're spread across 23 African countries, and we have just about 110 staff across those zones. The world as we know it has changed, and we all are feeling the impact of COVID-19. And the economic impact is likely to even surpass the health crisis that we're facing. According to the Bureau of National Bureau of Statistics in Nigeria, the economy contracted by 6.1% in the second quarter of 2020. And this is obviously due to COVID-19 induced economic crisis. But more than that, it's also the double whammy of the oil price crash that Nigeria as an oil producing country is facing. The impact of this financial blow continues to be felt most strongly by low-income populations who do not have access to financial safety net. It is in light of this challenge that we, as the UK government, are excited to be working with the Catalyst Fund, who aims to support those currently underserved by financial systems through innovative fintech startups that are designing products to meet their needs. In January of this year, we officially announced our partnership with the Catalyst Fund on the scale-up of the Innovative Fintech Accelerator Program, as they expand their focus after 4 successful years to support more local entrepreneurs across Africa, as well as the tech ecosystem around them, and enter key markets for fintech, such as ours here in Nigeria. While Nigeria's population is young and continues to see a rise in demand for digital products, more than a third of the population still remains excluded and have minimal access to financial services. There has never been a better time than now for fintech in Nigeria to act as a force for good and expand access and meaningful usage of financial services, especially in the light of this pandemic. We believe this work and the growth of the fintech sector is vital not only to economic recovery for the market, but to enable individuals and small businesses to build resilience for the future. So it's not just about coming through this crisis, but being stronger to face potential future crises that might come. While many sectors have suffered as a result of COVID and the induced economic pressures from COVID, the tech ecosystem is one that has achieved tremendous uptick in relevance. be it e-commerce, be it health tech, be it agri-tech, and the other forms of tech that we know, the relevance of this sector has improved. And the real backbone for the entire tech sector, if I may say, is fintech, because the tech sector depends on that backbone to function. And the UK government is keen to continue to support the growth in this sector, especially in Nigeria. And this is evidenced by the recent launch about early last month of the Tech for Growth program, which aims to promote the UK as the global center for innovative solutions to deepening access to financial services across emerging markets. And the Tech for Growth program basically functions on 3 pillars, which is pillar 1, establish a UK-Africa Tech for Growth ecosystem, essentially getting the dialogue going between tech operators in the UK and tech operators in Africa, and deepen the knowledge base to upskill and empower UK-Africa trade. That's the second pillar. The third pillar is to support and scale the emergent African tech sector. So we're extremely keen to working with Nigeria and the tech players in the Nigerian ecosystem to basically upskill the capacity that we know that is inherent in Nigeria as a country. We remain extremely excited about the prospects of Nigeria and about the prospects of the tech sector in Nigeria. And we believe we are able to achieve mutual prosperity by working together. I will end by thanking the organizers of this very excellent event. And I'm positive that conversations and discussions that will be had today would go a long way to improving the prospects of the tech, fintech ecospace in Nigeria. Thank you very much, everyone.
Thank you very much, Lami. And we are very pleased to have the support of the UK government as Catalyst Fund. And we also applaud all the other initiatives that are happening now. We think there is no better time for these initiatives. So we will go over to our keynote speaker, who I'm sure is someone most people in the room know. We will now have the keynotes from Ido Sum, who is partner at TLCom. Hello, Ido?
I don't see Ido.
Yes, I think maybe Ido might be having some issues connecting. Okay, then. I think.
Can you hear me now?
Yes.
Okay, great.
Fantastic. We hear you clearly right now.
Even see me. Amazing. Okay. Okay. So I was speaking to myself. Thanks everyone for having me here, for Catalyst and GreenHouse to pulling this together, and for everyone who found the time to join us. So in a couple of minutes, I'll try and give you a background of who am I and where am I coming from, and maybe walk us through, hopefully, through the implications of COVID and what does it mean to us as community and US startups, in my view. In short, I'm a part of TLCom Capital. We're one of the very first Africa-centric VC funds. And next slide, if anyone can do that for me, thanks. Managing about $71 million and investing all across sub-Saharan Africa. We're 4 partners split between Lagos, Nairobi and London, and typically fly a lot, but recently less so. And we are investing in everything tech-enabled across sub-Saharan Africa, where fintech is clearly a major part in all of our investments, though we have not done many directly in fintech, but fintech definitely plays a role in each and every one of our investments. If we can jump to the next one. We are investors in 8 companies as of today, and there are 3 in different completion stages as we speak. So I hope we will have more over the next 4 to 5 weeks. and we have invested across what we find to be the most important verticals in the continent, from agri and logistics to education to SME support and to and the B2B sector. And we are very keen to keep doing so in many other verticals. If we can jump, thank you. So maybe just take us a step back to what does it mean? I think we're all going through a sort of a new world in the last 6 months, and it is meeting all of us in interesting ways. I think Africa is having had a slight delay maybe in the impact of it, but joining sort of the rest of the world with more and more cases, unfortunately, it is starting to hit the economy pretty bad. We're seeing and planning to see a fairly severe decline in GDP across Africa, both at the country level and of course at the per capita level of about 7–8%. And according to many surveys done in Nigeria and many other countries, 60% or more of people lost their jobs. This is now shrinking over time, but the numbers are still extremely high. If we can jump to the next. Thank you. We're unfortunately not just dependent on ourselves as a continent, but Africa is very dependent on global trade. More than 80% of its trade is import and export is with non-African parties, and this was severely hit alongside a very high decline in remittances, which represent another 2 to 5% of GDP in most countries. So that's another hit, and that I think all translates into both individuals and SMEs as well as corporates all losing their spending power, all being able to spend much less money than before. If we can go to the next one, thank you. So where does it put us as a community and as a fintech focused community? People still need to pay and get paid, and I think that stands, in Africa and everywhere. People are consuming more digitally. We have seen the rise in e-commerce in pretty much all the developed world. I think that there was maybe a conception that not all of it has hit Africa, and Jumia was getting a sort of a bad reputation around their last report. If you look deeper into the numbers, I think that you actually see a very high increase in their numbers. There's much more happening on their platform than before. They're just calculating revenues differently, but the underlying phenomena is that people are consuming more and more digitally, and this is of course just a proxy to what is happening in e-commerce across the continent. And we see it with more and more digital services in other sectors. We had seen a pullback on a lot of the mobile credit and digital credit, unfortunately, at a time where more and more people need access to finance and access to credit. And this is creating a lot of opportunity. It creates opportunity to think through credit models, what can be done to help ourselves, to help fintechs and banks better assess what is going on, not just based on history, but based on future perceptions of people's ability to pay. It makes us think, what are the implications of this to banks and telcos, and find better ways to partner with them. These are times in which all of these organizations are looking for ways to cut costs and not necessarily spend more on new services and offerings. And I think we as entrepreneurs and investors are forced to think through that prism right now. It also allows us to think through more verticals where we can now better serve in a more efficient and more cost-effective way, education, agri-health, and so on, and deliver more and more services in a digital manner. If we can jump forward, thanks. I think it is a great time for us to really focus our thinking around who are our customers in such times, and what, how are they affected more specifically? What is the effect on their actual spending power, whether these are corporates, SMEs, or different segments of the general population? How is it affected in the short term, and what does it mean to our business model, and will it be effective over the next 1 or 2 years? Which is the vertical that we're in fragile, i.e. did it see a very high decrease in activity in the last few months, or is it more or can it better stand such crises? And we can now assume, I think, that we're looking at least 18 to 24 months of sort of less clear future and a lot of ups and downs. It is a great time to think through whether what we do is truly core and essential to our customers. We're seeing it everywhere across our portfolio. People are really only willing to pay on what they really need to pay for. And that means much less spend on IT, much less spend on subscriptions, much less spend on other things, and much more focus on what really matters on price and the short term. And we also need to think through what will happen when things start to bounce back, and what are the actual KPIs we will follow as a small business, as a startup, to indicate to ourselves that things are changing. And if we can move to the next one. So I think it is a great opportunity, not just a crisis. And a crisis is always a great opportunity for those who look through it through the right prisms. But there is, of course, a liquidity pressure on all of us, and we're forced to think through that nowadays, to make all the required operational adjustments in our businesses and really keep our hands on the pulse of our customers, our clients, what matters to them the most right now, how can we help them with the most severe pain points in the most cost-effective way, and how can we be there for them when things start changing and be the most agile we can, responding to their changing needs in the next 12 to 24 months. So that's all for me, trying to keep it at 7 minutes. Thanks everyone, and enjoy the rest of it.
Okay, thank you so much, Ido. And I think that sets the tone greatly for what we are here for and the discussions that happen over today and tomorrow. All right, so now we will go to the reason why we are all here, to have the discussions themselves. So for our first panel, we're going to be having a panel session, and it's titled Opportunity in Crisis, Digitizing SMEs for Post-COVID Resilience and Recovery. And this will be led by the Catalyst Fund. So great. I now call on, sorry, Mylise. I now call on Mylise to moderate this panel.
Great, thank you, Nosa. And I think I'll jump straight into it and introducing you to our wonderful panelists. So I'm joined for this session by Ashley at Exxon Venture Lab. Hi, Ashley. Peter at Field Intelligence, and Yemi, CEO of Flex Finance. Welcome, guys. Can you wave so people know who you are? Great. Thank you. So let me start by giving a brief context as to why we wanted to have this specific dialogue in this session. So the economic recession, as we said, and as Ido really thoughtfully and compellingly pointed out, has really drastically actually affected SMEs across emerging markets, and particularly those that could not affordably and easily digitize their businesses, right? And that included accessing capital to buy inventory digitally, paying debts, continue to service customers, and just like optimize their business in times where they had to operate remotely in lockdown conditions, etc. And MBFA was actually running a couple of surveys during COVID-19 around the world, and found that informal SMEs are under a lot of pressure. Over 80% of them have lost income, could not pay their debts, and had to make significant sacrifices with other critical household expenses. And more generally across East Africa, the trend, because the majority of the economy is actually powered by these informal SMEs, we've seen that individuals that were employed in the sector and at the cusp of income stability, so having maybe risen out of poverty but not quite yet in rising middle class, and that is over 60% of the population. Those are the ones most at risk, given that they earn their livelihood in an unstable manner. And we've seen also across our portfolio, and have been so inspired by the likes of companies like SocoWatch in our portfolio, Flex, and even Field in Exxon Venture Lab portfolio, Turaco, and many others that have responded to the crisis with new solution innovation pivots that played a huge role, and I think have played a role especially in helping SMEs cope during this time and likely recover. So to put economies back into action. So you guys obviously are at the heart of it, especially Flex and Field, and Ashley, you've been investing in this space for a very long time. So I'll start with our two entrepreneurs, so Peter and Yemi. Can you tell us how you're supporting SMEs today and how you've seen SMEs needs change during COVID? Maybe we'll start with you, Peter, and then jump to Yemi.
Cool. Hi, everyone. Thank you to Catalyst Fund and GreenHouse Capital for having me. I think that one of the very first things we saw when the COVID-19 outbreak started in Nigeria, particularly, and in Kenya, was a lot of people were confused. A lot of people were not sure, what does this mean for us? What does this mean for our business? How does this affect us? And particularly for our pharmacy locations that we work with, there was a particular concern around the availability of products, the availability of very essential commodities that patients would need to survive. The first thing we had to do was to provide some form of supply stability. And that meant that even though prices in the market were jumping, for certain products by about 4 standard deviations and moving up between 7 to 11%, we were able to get these products and ship these products and ensure that they remain on shelf at the location, at the community pharmacies we're working with. And that was extra important because a lot of hospitals were not accepting patients. And so the first point of call for most people on the continent is the community pharmacy. And you can imagine a scenario where even those pharmacies now started stocking out of the essentials, say things like malaria meds, antibiotics, things like that. And so our first priority was guarantee supply stability, ensure that these products are on the shelves, get those things sorted. The next thing was to provide some form of education. How can we upskill the locations that we work with to ensure that they are even able to provide some form of guidance? Again, if you know how the healthcare system on the continent works, you know that the first point of call for most people is the community pharmacy. And so we felt that that's an intervention point for us to say, you should be able to give some very basic counseling. These are the things to look out for. And so that meant shipping hand washing stations to pharmacies in Nigeria and Kenya. That meant shipping educational posters. That meant retraining our fulfillment partners and ensuring they all had PPEs and shipping extra PPEs to pharmacies, all in a bid to ensure that these pharmacies were able to survive, were able to thrive, and were able to provide these services safely to patients who walked in. So those were the very early things we did at the onset of the pandemic.
That's great, Peter. And I think for those that are not as familiar with Field and Shelf Life, can you just take a step back and give a brief intro of what you're offering to SMEs, even outside of COVID?
Sure thing. Field is primarily a health technology company. We work both with governments and in the private sector, providing supply chain solutions that provide reach huge numbers. So for example, in Nigeria, one of our products, Full Supply, is used to manage a lot of the private or the public sector healthcare services, and that's covering about 35,000 facilities in Nigeria. Shelf Life is our community pharmacy service where we offer inventory management as a service, consignment, vendor managed inventory, the cheapest finance on the markets to these locations, and we do that with community pharmacies in Nigeria and Kenya. We are serving currently about 300 locations spread out between Nigeria and a couple cities in Nigeria and Nairobi in Kenya. So those are the two main areas where Field operates. Got
it. And so have you seen also the inventory management needs of the community pharmacies change during this period?
Yeah, I think one of the very first things we saw were the kind of products that they needed. And so there was a significant uptick in the demand for things like vitamin C's, for paracetamol, for certain products in those, like a significant uptick, and the prices really, really went through the roof. And so that's where things like our price guarantees, our ability to use our size, our scale to negotiate better pricing and better offerings came into play. And we could use that to the benefit of the community pharmacies that we were working with. Yeah.
That's excellent. Yemi, how does that resonate with you?
All right, yeah.
Can you tell us a bit about Flex, and have you had a similar experience in terms of having to adapt?
Yeah, awesome. Thanks, Melis. Thank you, everyone, for having me. So what we do at Flex is we provide MSMEs in Nigeria these tools to digitize their operation. COVID has made MSMEs far more aggressive in their drive to digitize their operations. Pre-COVID, we saw a gradual and sustainable adoption of mobile payments, selling online, etc. But the way COVID abruptly brought global trade to a halt and forced people to stay at home, we have actually seen this aggressiveness in this segment to adopt these digital tools. And one thing that's interesting for us is we launched during the pandemic period. And, in terms of, we've been able to see how people have interacted with our products and, as properly assess their needs. What they can't track, it's impossible to measure. And these SMEs are, making it very important to trim unnecessary fat. And they know certain excesses that, were allowed pre-COVID. They actually need to take proper financial management very, very, even more importantly. We saw them struggle with solutions like pen and paper, Excel spreadsheets, pre-COVID. We saw them struggle with solutions that required them to have a higher financial literacy. But with Flex, what we've done is rather leverage their digital literacy, which is far greater than their financial literacy. And with what we've seen is, even though that there has been a slowdown, in business activity as lockdowns are easing up, but a lot of businesses are trying to, imbibe better standards in terms of budgeting and tracking their expenses, which is where we are starting our product offering from. So yes, right.
That's very interesting, Yemi. So have you seen actually a change in behavior? Like the SMEs that you were serving were actually using the tool more post-COVID to track expenses and do better budgeting?
Yeah, so with what we've seen, during the COVID period, there was an obvious slowdown in business activity. So they weren't including a lot of transaction, sales were down. So obviously what they were actually spending were also down. But the interesting thing we saw was that considering that this employs the vast majority of Nigerians, and considering the nature, a lot of these businesses evolved to ways their businesses can operate remotely in terms of imbibing delivery and the rest. So for segments of the market that could run their businesses remotely and do deliveries to their customers and the rest, we saw transactions for those segments. And for other segments, what we did was we pretty much tried to help them onboard their historical data. Yeah, it was a tour, but to in the interim to build that discipline and that proper financial management culture, which inevitably would enhance their access to essential financial services like credit, etc.
Right, because we know it's actually quite a learning curve, so that's great.
Yeah.
And Ashley, over to you. You actually have supported Yemi and Flex Finance and invested obviously in Field Intelligence. So how are you thinking about these SME models, and what risks do you see in the evolution, pre and post-COVID?
Absolutely. So thanks, Meili. So just to give everybody some background context, Axion Venture Lab is a seed stage investment vehicle focused on fintech for financial inclusion. And as Meili's mentioned, we've invested in Field Intelligence. We also worked very closely with Yemi when he was launching his business through our company builder program. But beyond that, we've gone on to invest in 8 different companies across Africa, which 4 of them are focused on directly supporting MSMEs in some way, 3 of which are actually all digital SME lenders. And so when we were going into COVID, naturally as an investor, kind of scramble to make sure that things are not going to blow up across your portfolio. And you really want to take a look at your portfolio quality and things like that. And so what gave me a lot of reassurance during the COVID period is that, and I will not sugarcoat this, the first few months of COVID was very unsettling for a lot of our lenders, right? We saw overall a tightening of lending activity. So most of them kind of halted lending, and a lot of their clients were just not able to trade. And that meant that their ability to repay loans was just very much limited. And this obviously was also directly tied to certain sectors. And so we saw sectors such as restaurants, bars, tourism related businesses really struggle. And then there were some like exceptional situations when you have e-commerce related businesses, or in the case of Field Intelligence, when you're dealing with essential goods and services, where we saw tremendous spikes, right? One thing that I thought was quite interesting, starting in June, and Yemi spoke to this, was that there was a drive to digitization, right? And so starting in June and July, when businesses were starting to come back online, and when I say online, I don't mean digitally, but just come back into operations, we saw across our portfolio a tremendous spike, and actually in some instances surpassing the levels before COVID. And so, for example, in Kenya, one of our portfolio companies there had one of their best months ever when it came to number of transactions and clients on the platform. And I think that this speaks to the fact that both customers and MSMEs are starting to align and say, we want digital services and we want to be able to pay digitally. And this is an important aspect for any kind of SME lender. Now, I'll stop there. I have some more thoughts, but maybe you have some more questions too, Meili, so I don't want to derail.
No, that's fantastic. And I'd love to actually double tap on some of the things you mentioned. I think it's very encouraging to hear that perspective from an investor. Like, while at the beginning, obviously, everyone was more in retrenchment mode. And I think the advice to all companies was try to extend your cash flows as much as possible. It's good to hear that there are some models that are successful and that trends will only intensify. So something that always stuck with me that you told me in the past is that you've seen an evolution, in these models, that maybe at the beginning it was SME credit, like really lending models only, but now you're seeing platform type businesses that are more holistic. So what are some of those models that you've seen succeed like in this period, and how do you think that trend will continue?
Absolutely. So, if I look to our history of investing, 2 or 3 years ago, we were really focused on digital SME lending. And so that's when we did the Lulaland investments, for example, in South Africa, or Lydia in Nigeria. And that was that first wave of innovation on MSME lending and being able to get credit in the hands of small business operators. What we're seeing now, and when I say now, probably like in the last 12 to 18 months, is this move to what we're calling platfin businesses. And so using a much more expanded service offering to not only extend credit, but be able to manage logistics, access to goods and services, and what I like to say is kind of ensconcing the small business with all of the services that they need to succeed. And I think Field does a fantastic job at this, right? And so it's really difficult for, and Peter can jump in at some point, but it's very difficult for a Field client to say, we're only thinking about Field and Shelf Life as our financing partner. Really what they are is they are our logistics partner, they are our procurement partner, they are our financing partner. And it's really hard to disentangle that, which means that it's very sticky, it's continuous, and you can build very deep relationships with your clients. And also then build on additional financial services or other services that can serve them better. And so this is actually what we're considering that next wave of support for small businesses. We also have this theme that we call Next Gen MSME, which is similar to what you're hearing from Yemi at Flex, which is saying we want to provide you with the necessary infrastructure to better understand how your business is operating. And from there, we can layer on financial services as well. So it's kind of a similar problem to tackle, but different products and services that are being plugged in and making sure that small businesses are really supported. Because at the end of the day, lending is very important, and pretty much every small business owner is going to say, I need more money to execute more. But at the same time, there are there are gaps that they need to fill, and that's what I'm really excited to see both Flex and Field achieve in the market.
That's great. I'm curious, Peter and Yemi, do you want to comment on some of the things Ashley mentioned and how this holistic vision of the SME's needs is core to your value prop and the roadmap that you have for the future?
Yeah, I know that a couple of people who joined would have seen Field and been thinking, why is a healthcare company speaking at a Fintech conference? But Ashley really just nailed it. It's these businesses. So first, there's the common misconception, and I see a lot of people say this, that SMEs need a lot of credit. The truth, however, is SMEs already have a lot of credit. Now, that credit that they have may not come in form of cash. It could very often come in form of product, inventory, which is just cash by other means. And so what you have to understand that the problems that SMEs face goes beyond just accessing credit or accessing finance. It also includes, how do I manage my finance? How do I know what to order, what to stock, what quantities do I stock? How do I manage expiries? How do I deal with multiple suppliers? And so what we do at Field with Shelf Life is we take all of these things and wrap it up into one service. So you sign up for Shelf Life and you get everything layered onto it. And it really fits the definition of what a platform fintech is. It's because it's more than one thing, you know. So we have Shelf Life customers, for example, who signed up to Shelf Life because of working capital financing or expiries management. Some other cohorts of them signed up for inventory management. And so it even for Field and Shelf Life, it starts getting even harder to define yourself, because you're offering these group of services to these locations, but what are you? Are you a solely health tech company? Are you a fintech company? How do you position yourself in the market to be able to do that? Yeah.
Right, a bit of an identity crisis, but really it's complementary benefits for them.
Yeah.
And Yemi, what about you?
I agree with what Peter and Ashley have said. For a very long time, the SME segment has been deeply misunderstood. And I think what solutions like Flex and Field could do is helping the business owner understand their business. So once you've holistically solved that problem where they are part of their business that they properly understand, they have the data to make informed decisions, it will be easier for them to communicate their business and their transactions to financial service providers, lenders, etc. So I think solutions like this in the long term will lead to greater prosperity for this important segment. Yes.
Definitely. And if I can, maybe put you on the spot right there, but as people say, never waste a crisis, right? So if you were to think about the next feature that you think is fundamental to actually support MSEs in this moment, what would you roll out as part of your business?
Okay, all right. So what we've seen, due to the abrupt nature that a lot of businesses have been forced to accept digitization, we've seen a gap in how they take orders. Like a lot of walk-in stores have been shut down due to restrictions. Some are opening up, and a lot of them have adopted digital means of something as simple as taking orders. So in the spirit of not wasting a crisis, something to simulate that process where someone reached out to you via a phone call or social media or an SMS, and you're pretty much able to have some sort of CRM that is simple and easy enough without any flaw for you to manage that process. So I think that would be my response to what you said. All the taking, it seems to be very arbitrary, but yeah.
No, that's great. I love that. And Peter, what about you? What would be the feature you would develop?
It would be very close to what Yemi just described.
Interesting.
But it will be very close to that, and it will be something that helped, shop owners, for lack of a better word, manage their shops better. Because there were movement restrictions and people couldn't move around freely, you found out that a couple locations who would have, say, 3-4 staff suddenly were extremely short-staffed. And so it will be something to help the owner, or if it was just one person managing that store, manage that more efficiently. So see the things you have better, keep tabs on the things on your shelves better. Just make that entire process simpler. That would be it.
So continue to optimize in that for them.
Yeah.
Got it. Okay. We have actually a very interesting question that's just come through in the Q&A by the audience for you, Ashley. So here we're painting a clear positive story overall, but we know there's obviously a lot of challenges in making SME models work in the context of emerging markets. So the question is, how much of a gamble is it for SMEs to take on more financing to improve their e-commerce capability and take advantage of this uptick in consumer digital adoption? Like, do you really think that this digital boom will be sustained, or might we see actually a trend sort of reverting back to old behaviors? Because we know behavior change and digital adoption is a challenge.
Absolutely. So if I were to advise a small business owner here on, how to appropriately use leverage, I think the thing is it's test and learn. So just like how we talk about with startups, you know, you want to get out, test, and see how it goes before you bet the whole the whole show on one thing. I think the same thing applies to a small business owner. And so as you're testing whether or not your products and services are landing with your audience, potentially if you want to take a loan, if you don't have the capital yet to do that test, consider some of the lending options that are in the market. But you might not necessarily get the most optimized pricing for that first round of testing, but it's all about scaling, right? So if you do that first test, see if there's traction, and then grow from there, that would be my recommendation. However, to the core of the question, we're talking about, is this e-commerce or digital life here to stay? And to be quite honest, I do not see us taking a full step back and reverting to how we were experiencing life beforehand. I feel a lot of people, whether they liked it or not, were essentially shoved into this digital age and are starting to just accept the fact that this is the new normal. And that obviously creates a huge opportunity for small business operators to access new markets, to get better priced inputs and products as well. So working with their suppliers, and that just opens up their pool of potential organizations to reach into. And I think that this is going to create a level of hopefully optimization where more small businesses can actually thrive and grow. And so I guess to wrap that up, test and learn, don't take too much credit. I'm also speaking from the person who is also monitoring very closely all of our loan books and loan book quality. So I like to see small businesses that do this in measured form. But yeah, give it a try and see how it goes.
Excellent answer. And I think I very much agree with you. We won't see, there's been a leap, and it's just now, how do we make sure that it works? Like we make it work really for everyone, especially the informal underserved SMEs. So staying on challenges for a second, because we've seen these, actually you have seen in your portfolio actually a positive trend lately, but I'd like to hear from the entrepreneurs. So Peter and Yemi, either of you, what have been some of the challenges that you have faced, whether that's your own fundraising or operations and actually servicing customers during this period? And how have you, what are the things you've tested to overcome those challenges?
There's a few things. Yeah, the first couple of months, at least the first month of the full-scale lockdowns were tough. It was really, there's no way to sugarcoat it. It was really tough. But one of the first things that hit us was a lot of our customers like to pay by checks, which they pay over the counter into a bank. But banks were shut, and so there were a lot of checks sitting with customers who couldn't pay. They couldn't get the checks over to us. We couldn't convert the checks into cash into our bank account. And so that was the thing we had to figure out, like, how do we get this to work? Are there mobile money players in the market that we can use to pick up these checks? What do we do in this scenario to deal with that? And that was one thing. Another thing was about customer acquisition. A large part of our acquisition plays had depended on in-person interactions, but suddenly all of this was pulled away and taken away from us. And so we had to very quickly rethink the entire process of acquiring new customers, walking them through the process, onboarding them. And all of these things had to happen virtually with the same level of interaction and focus that we would have had when things were normal. I think we also had to prioritize a couple of things we had thought we had some more time to do. And so we had things like certain things we wanted to digitize, but we had pushed them a bit further in the roadmap. We just had to reprioritize them because we were sitting in this scenario where those were the only things that we saw that could give us headway in the market. And we tested a few things out. We tested a few things like, how much credit do our locations need? How much credit do they want? What terms do they want? We had a couple ideas, but we had no concrete evidence. But this gave us, it was literally a scenario where we had an opportunity to test 4 different things at the same time in different markets and see, fine, what are we learning? Now we have a clearer idea of what will work in that space. Now we have a clearer idea of what kind of tools our locations need. But in the initial month and a half, it was tough to figure those things out. Yeah.
Okay, but it gave you, in a way, more insight into what's needed in this more digital world. Yeah.
Yeah.
Very interesting. And Yemi, what about you?
Yeah, so a little similar to what Peter said. We also have to pivot our strategy in terms of onboarding, businesses onto our platform to purely digital. We initially had boots on the ground, go to a lot of these stores, talk to them, onboard them onto Flex. And, the first month that we launched, because business activity was generally low, we had people that were saying, oh my God, hey, I love this app. I wish I had it earlier. I'm just going to download it, register it. And when I get back on my business, I'm going to use it. So we saw a lot of people registering, but weren't really active on the platform. And so we had to work on different things and different ways to keep them active, to keep them engaged. So it's not, so considering the fact that the core of our product needs businesses to do transactions so they can actually record them. And the lockdown was pretty much, putting that in the bud. We had to come up with ways to engage these guys and, further refine our product, do our user testing, digitally. A lot of our product processes that we relied on actually seeing the users to observe them, we have to pivot them to, purely digital means. And even us as an organization, going through the remote and ensuring everybody is properly equipped. So yeah, these are some of the things that we saw.
Right. So we hear that a lot, that actually digital onboarding and digital engagement for digital tools that are geared at SMEs is difficult. So what would be your advice, Yemi, to other startups in the room that are developing digital solutions aimed at SMEs and struggling with those two issues, onboarding and early engagement?
Okay, I think one thing that we tried is to collect only what is really, really necessary to get the user into the app. So we see some products, we saw, based on our testing, users don't like to be asked a lot of questions up front. So we didn't want to lose a lot of these businesses up front. So what we did is we collected a really base amount of information, then, create a process to incentivize them once they get into the product. So I think it's in terms of the kind of information you want to collect, I know startups will need data to process, to understand our users, but I think a priority should even be getting them into the app as easy as possible, then creating some form of incentives to provide the other information that would enable you to provide a richer experience. For us, besides the basic information, we knew what was really important to collect was for them to set their budget. So we prioritized on that. And as we saw uptake, we began to add other very important things that we wanted them to do along the line. So as less as possible to get them into the app.
And there's a question actually in the Q&A from Dan. Thanks, Dan, for posting it. That about digital identity. So before I ask his exact question, is verifying identity of these SMEs been an issue for either of you, Peter and Yemi, or is that something that you've figured out a process to do easily, or you rely on third parties? What's that process like?
Okay, what we've seen with the segments we're targeting is their business identity is closely tied with their personal identity due to the nature of these businesses. So what we've prioritized is identifying the business owner. And I don't know about Africa generally, but I know there are ways, for example, like the bank verification number that we have here, some level of ID that we could get from people's phone numbers in terms of verification, IDs. So we pretty much prioritize the verification of the business owner, as considering that it is closely tied to the business. So then we can verify the business and going forward, etc. Yeah.
Great. And Peter, what about you?
For us, it wasn't so much of a problem because our ways of identifying these businesses are pretty set. A lot of these businesses are regulated and have to have. We will only work with these certain businesses that have specific regulations and registration. So it was easy for us to get those and work with those offices. There was nothing really drastic we had to do or switch around to take care of that.
Got it. Okay.
Yeah, maybe I can add to that from what I'm seeing across the portfolio. Most of these companies are registered in some kind of way. They already have a business bank account, at least the ones that we're seeing gain access to lending services. Similar to what Peter said, they are registered or linked to either other associations or other formal organizations.
Okay. And actually, Ashley, though, well, when we were doing a bit of an analysis of the trends, like what will happen what are the subsectors in fintech that might get a bit of a push, right, and emerge stronger post-COVID? Digital identity solutions is certainly one, like as everything goes a little bit more digital. So what are you seeing in terms of digital identity solutions across sub-Saharan Africa, especially in the context of e-commerce and increases in e-commerce solutions? Are you seeing more startups popping up? Are you guys focusing on that as an investor?
Yeah, maybe what I could do is share a bit about the themes that we're most excited about, and then I can talk to you about the digital identity and how that plays a part. So, we actually refreshed our investment themes earlier this year, and then did another dive into it over the summer in the middle of COVID to say, hey, did this weather the storm or not? For the most part, everything has remained the same. So it's not surprising this platform vertical as well as next-gen MSME is very interesting to us. We also have a strong interest in what we call new assets. So looking at consumer finance from a different perspective, how can you leverage new assets such as wage or other kind of, I would say like wage advance as a way to potentially extend credit. That's very interesting for us. Obviously, this intersection between agriculture and healthcare and finance as well. And then we had this sixth kind of theme, which was KYC and digital identity, right? And where we landed on that is it's something that we're really interested in. What we've struggled with, and I've seen a few models pop up in the region. I wouldn't say it's the most popular. However, what we've landed on is it's extremely important that these digital identity players have, and the country specifically is on a pathway to really adopting this. And so I think that there's this regulation element and a policy element that's important to take into consideration. And we've seen the models that are the most successful be very much interlinked with government approaches to KYC and digital identity. Going about it, the corporate path, we've been a little bit less excited about. So digital or acquisition of corporate partners and digitizing their communities. But there are a number of players in Africa that are doing that, and I hope they have a lot of success there.
Very, very interesting, and actually aligned with some of the themes that we're also seeing on our side and what is exciting for us too. And the KYC digital identity for me is definitely also horizontal, like that part of that infrastructure, the pipes basically that will enable a lot of these other solutions. So since we are in a bit of a forward-looking future mode, asking especially Yemi and Peter, what is next for you guys, for your organization in terms of either new offerings that you want to bundle what you already have, like back to the concept of platform and servicing the needs, or simply what you need to prove next, because we know the journey of the entrepreneur is constant iteration and getting to proof points.
I think some of them for us would be expanding our footprint, definitely. And then proving that the things that we learned during COVID, the kind of support that we think these businesses need, both in terms of finance, technology, and just the pure product offerings, that these things are true and these things are spread out over wider areas than the areas where we did the test. Those are the immediate priorities for us, just seeing, and if those prove to be true, then launching products or services to attack that as part of the wider offering that we're currently taking to market.
Great. And Yemi?
So I think for us as a startup, we're looking to expand the value offerings that these SMEs get of these inputs. Imputing their transactions, we want to expand the value they get from it in terms of insight, in terms of access to partners, working with partners to make lending available to them, insurance, etc. So the value they get from being instituting proper financial management, we really want to expand that. Yeah.
Great. So both of you, it's really expansion of footprint and expansion of services. Very interesting, because as more of these models pop up, I wonder, Ashley, are you foreseeing in the next 6-12 months consolidations around specific models? So like maybe all will become platforms as you define them, or a lot more next gen SME models will pop up, or maybe we'll see some consolidation and acquisitions. What's your view?
Yeah, that's a good question. I don't know if I'm yet there on the consolidation acquisition front. I still think that we need a bit more time on that one. However, I am seeing a convergence on this concept of platforms. And I'll be very honest here, the number of platform businesses that are coming across my desk between, let's say, November of last year and today, it's like tenfold, right? Obviously, the number last year was really small, so 10x is it's different. But I would say compared to traditional kind of invoice discounting models that I used to see a lot of, or digital SME lending that's not invoice based. So I think that everybody's waking up to the fact that they cannot just be a lender by themselves, and that their businesses need more support, and providing that support actually helps to reinforce the strength of their loan book. So that's where I see a lot more people moving.
Interesting. Okay. Yeah, and I agree with you. I mean, it's too soon to tell, like, if really we're going to see consolidation or mergers, especially also in the context of the big super platforms, like players like the Amazons and Facebooks, and what they're going to do in these various countries and develop their own offering. So it's soon to tell, but it'll be certainly interesting to watch the space over the next 5 years.
Absolutely.
And a question for the three of you, and you can answer in whatever order you choose. But what do you think is needed from ecosystem enablers like Catalyst Fund, like GreenHouse Capital, which has also dual hats, or governments, to make sure that fintech innovators like Flex and Field can grow and continue to address really the challenges of SMEs?
I think I'll just jump in first. I think there needs to be more awareness of what other players are doing, so you can see if there exist opportunities to collaborate better. Because you find that you're looking for a particular solution and you're making that decision to build in-house, where you could have collaborated with another startup that exists, somewhere close by, and moved further along faster. That would be one of the things for me that would make this whole thing a lot easier.
Okay.
Noted.
I think all right. I think I'll go next. I think first of all, you guys have been amazing so far. I would know that because I'm part of your current cohort. So, but in terms of broader ecosystem, I think there needs to be some level of education and awareness in terms of what the opportunities are. Maybe in finer detail. So, speaking to a couple of players, and some assumptions like certain markets are saturated. So most people judge markets from the number of players and not exactly by the size of the opportunity. So I think perhaps if the size of the opportunity and size of the problem is properly surfaced, ecosystem players will understand and be able to make better informed decisions based on the gaps of the market that you are able to highlight. So, yeah.
And from my side, I'll answer it in two ways. First, from the investor perspective, and then some feedback on Catalyst and what I've observed from what you guys are doing. So I would say for ecosystem supporters such as investors, my plea is like not to take your foot off the gas. Don't stop investing. Continue to find deals to do in this region. I've found that the COVID period was actually a very active deal time, and there's actually been quite a lot of activity. And so that I was very concerned that investors were going to ease off, but I've seen a lot of activity. And I think it's been great because like businesses, we've had to also reinvent our approach. So moving to all virtual due diligence processes and things like that. So we're all evolving with startups and as well. And then for Catalyst Fund, what I think that you guys do that's great, and I would love to see more people do this, is helping organizations launch their first financial service product, right? So if there are already existing platforms out there or businesses that already have a core competency but see a way to layer on financial services, kind of going on this theme of platforms, that's something where I think you guys do a great job, and I'd love to see other actors supporting organizations in that transition, because there's a lot of ways to become a fintech business, right? It doesn't have to happen on day one, and showing that there are different ways to tackle all of these problems that we're looking to tackle.
That's a great pledge, I think, on all fronts. And we were definitely also worried about a big winter, and it's great to see that people, in spite of doing remote due diligence, investors have continued to deploy, so which was frankly unexpected. So in the next session, we'll explore that more.
Yeah, I'm currently writing a piece about how we transitioned our diligence process virtually. So I'll share that with you so that you can pass it on to the community and other investors if they find that helpful.
Yes, please. That was the topic of some recent webinars we had also for Circle. So I'm sure the eager readers of that piece. One question that came, and then I think we'll close, but I'll take one more from the audience, which is a question around data. So I think, as you all mentioned, I think Yemi and Peter, that there is a need for more information, knowledge, but also data. And I think it links to your point, Ashley, of needing to deploy your first financial service if you're a digital tool for SMEs or maybe an e-commerce platform. So in what areas do you see the availability of data expanding to support SMEs and SMEs models? That's a question from Steve.
Is it directed to somebody in particular?
Any taker.
Let me reflect on it a little bit more. And let me just make sure that I captured the question correctly. It's how SMEs are leveraging data to better serve clients. Is that correct? Or
rather, where do you see the availability of data points expanding that can be leveraged by players like Field and Yemi to better serve SMEs?
Oh, got it. Okay, I'll jump in on this one, and then Yemi and Peter, feel free. But this is where I get super excited about this concept of platforms, and I won't steal Peter's shine because he can speak to this much better than I can as the operator here. But the fact that we're seeing FMCG focused platform businesses, apparel focused platform businesses really being able to take order information, relationship-based information from their providers to really use that information and craft a financial product that works for the end MSME. And so that's where I'm starting to see more data, which hasn't traditionally been in our wheelhouse from the traditional lending perspective, really be leveraged. And the fact that a lot of these models also have agent networks that can go on the ground and visit with clients face to face. Sometimes you pick up some qualitative data that you just aren't anticipating the answers to some of these questions that you're able to also embed within your models. So that would be my response to that.
Excellent. And Peter, are you still with us?
Yes, sorry, I dropped off for a bit. Can you hear me?
Yes.
Cool, I dropped off for a bit, I apologize. I think I assume that this is the data question and how we're using data. That's very interesting. So a significant portion of the things that we do and why we're interesting to the market that we serve is because of how dependent on data we are. And because of the level of granularity and frequency with which we collect this data. So just an example to throw out there. We started collecting the price of one of the most widely used anti-malaria meds in Nigeria from 2017. And we could tell that in around middle Q2 2020, the price jumped by about 4 standard deviations. But what that did for us is we could see that coming because we started noticing the uptake on the week-to-week basis, and it enabled us hedge that spike and thereby protecting the customers that we serve because we could lock down significant numbers and negotiate better and prepare people for those shocks that were coming. We also use a lot of the data based on what is working, what is moving, what is not moving to inform the information that we give back to our customers. So we found that a lot of our customers rely on us for information about things like, what do I even put on my shelf in this new area? And so we collect all that information from lookalikes, for lack of a better term, and use that to inform a lot of the decision-making that we help enable these businesses make. So yeah, it's been extremely important to us how we use data.
Yeah, I can definitely see that. That's fascinating. And Yemi, do you see other pools of data coming available as the world becomes more digital that could be helpful to you?
Yeah, I think so far we've been positioned to have good insight into how money leaves these businesses. We currently are doing that in correlation into how much they project to spend. So this puts us in a position to know, are they this majorly going to digital forms of expenses? Are they majorly cash-based? And we are able to, in the long run, offer them maybe competitive rates on certain things that they spend on a lot, and expand the kind of value, they could actually receive based on this data, of them leaving. So beyond the correlation with how much they budget, we will be expanding that into how much they make, for example. So we are heavy on helping these businesses optimize how much they leave their business, and using this data to provide deep insights whereby we can layer a lot of interesting services. So yeah, so we're expanding from that point.
Yeah, that's interesting. It's actually changing the data source for you as well. Great to hear. And I think, unfortunately, as always, when you're having fun and people are passionate about what they do, time flies. So you guys' insight were fantastic, but we're almost at time. And we've heard, I think, a pretty positive overall and encouraging story here in terms of the opportunities that there are for digital models to serve SMEs and SMEs, whether it's pharmacies or the more digital informal SMEs that you serve, Yemi, and obviously the perspective of Ashley from an investor point of view of how you actually seen increased deal flow and increased activity in these models, platforms, or next gen SMEs, I want to call them. So that's really, that's great. And even the challenges, if you're all here today and still at it, it means you really work to overcome them, even the most unexpected one, like a black swan event like COVID. So I think it's great and very inspiring. I'll ask you one last thing to close from each one of you. We always say that, it takes the ecosystem, it takes partnerships, it's like all of us to make this work and make sure that we do drive towards an inclusive recovery. And I think that at the heart of that, it's commitment from the innovators, commitment from the investors, the corporates, the enablers like ourselves. So can each one of you answer or complete this sentence? In order to drive an inclusive recovery, I, as a startup, as an investor, commit to, and you fill the blank. I think it would be great for our community to hear.
Okay, I'll start. I'm not going to go through the whole thing. I don't know if I remember the whole thing.
No.
But I commit to keeping the client first, right? So for us, we're focused on financially excluded people. And when we're sitting around the table, we're talking about designing products, we're talking about financing companies, always keeping that client first and designing a product that they actually need, want, and it will actually improve their livelihood is what I'm willing to commit to.
Ditto. Peter?
Awesome.
Yeah, I commit to being open to collaborate with, players in the space, ultimately for the benefit of the end users and the customers that we serve. Yeah.
Cool. Yep. So, I commit to collaborating with, other fintechs and partners to expand access to financial services for SMEs. Yeah.
Great. And an excellent collaboration and partnership ending to lead us into our next session. So thank you very much. And I welcome everyone to thank the panelists with me, and we will hand it back to Nosa to continue the event. Thank you, guys.
Thanks. Well done, everyone.
Thank you very much, Baileys. Thank you, Ashley. Thank you, Yemi, and thank you, Peter. That was a really, really exciting and insightful session. I think we've all learned a lot about SMEs, digitization, and how we can build resilience and recovery. Thank you so much. And thank you to everyone who brought the questions. This is very much a joint discussion, so we encourage you to contribute as many questions as possible. Speaking of contributions, we will now have a polling session, which is powered by Brighter Bridges, who are our official insights partner for FinTech in Focus. For those of you who do not know, Brighter Bridges is a data-driven research company which focuses on emerging markets. And this is not one of those polls that is just done to keep people excited. It's actually an opportunity because we have a varying audience in the room and quite a number of people. This is an opportunity for us to co-create and contribute to some much needed insights So while we will have this polling session and also display the results, as part of the post-event, Brighter Bridges will be doing a thorough analysis of the data gathered here, and it will be shared back to everyone in form of infographics and documents that will be useful. So I encourage everyone to participate in this polling session. So can we quickly have the polling session up? Okay, great. So very quickly, our first question, and this question is specifically for startups. So please, if you are not a startup, you might want to just sit this one out for now. How did your business react to COVID and lockdown measures? So tell us how your business reacted to COVID and lockdown. And the options are: we did not pivot, we added additional products and services. I'm sure everyone can read that clearly. So yes, and then for our next question, COVID has somewhat accelerated the digitization process. What sectors of financial technology are likely to gain traction? This is an open question, so we can get inputs from everyone. So can we get your inputs on question 2? And then for the third question, this is also for startups. What did you see as the most compelling needs for customers when it comes to fintech services post-COVID? I think we can also have from support organizations who work directly with startups as well. This is also relevant to you. Fantastic. I see the answers pouring in. I'll give us about 10 more seconds. I see we have about 25% of people who have voted. Can we quickly wrap this up? Thank you very much. And I think we will end the polling. Great. So just sharing our results. I can see for question 1, most startups did add additional services. That is interesting to see. For question 2, merchant payments infrastructure, which can make sense because of the need for more social distance interaction. And for question 3, accessing digital wallets and personal finance. Okay, thank you very much. So we also have one more poll as well before we move on to the next session. Can we have the next poll? So this is a very simple one. If you feel like you want to connect to the Catalyst Fund team to facilitate connections with any of the speakers, our portfolio companies or attendees, please go ahead and answer and we will reach out to you. Okay, fantastic. I will end this in a few seconds. Okay, thank you very much. All right, so now we're going to be moving to our next session. And for this session, I will hand over to Bumi Akiyemiju, who is founder of Venture Guardian Group and GreenHouse Capital, our partners for FinTech in Focus. So Bumi, over to you.
Hi, Nosa. Thank you very much. And if the host can enable my video, that would be great. I want to thank Mylis for a great panel. That was really, really good, especially from the entrepreneur side of things. I thought really sharing those insights of how different startups are really adapting to the pandemic and everything like that is so incredible. Now, I know that everybody is always looking for money, right? Everybody wants to hear from investors. So I think I actually have, an awesome group of panelists here that I'm going to introduce shortly, who are all investors, right? So these are the money people, and hopefully we can learn a little bit about how investors are adapting. We've heard a lot about how, startups and entrepreneurs are adapting, This is, I think, going to be a fun session. So thanks again to Mylis and Nosa for sharing that. Before I actually begin introducing the panelists, I'm hoping that I can also make sure that they've all turned on their videos. I see two already of my panelists. Okay, I see 3, so I'm good. Now I'm sharing my screen to just kind of set the stage. The topic of today is really, rethinking the portfolio, right? How essentially are VC investors, angel investors, PE investors adapting to the impact of COVID-19? Are they scaling up? Are they scaling down? Are they moving markets? Are they shutting down, et cetera, et cetera, et cetera? Now, I have essentially 3 slides or so that I want to show you here. The first is, this is what KPMG is saying. Who are the winners, currently, and who are the losers? On one side, you see e-commerce like Amazon, right? You see logistics companies, right? The guys delivering food to your home while you're in quarantine. You see Zoom, you see WebEx, you see health companies, you see Netflix, right? Because we're all at home, bored, and we keep streaming. Maybe except Iroko. We'll come back to that shortly. And then who are the losers? You see oil and gas companies, airlines, aviation companies, hotels, and so on and so forth. Sports, the NBA, European League, what is happening there in terms of numbers? And essentially, how are they all going to react? Some are going to have a hard reset, according to KPMG, on the right quadrant, upper right. Some are going to transform, reemerge, and then others, business as usual. Where do we fit? And how is this dimension really going to affect how investors put their money down? That really is the topic of the panelists that we're about to go into. Now, my second to the last slide. Now, what is in common across all of these different logos that you're seeing in front of you right now? Very, 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 interesting times, right now. So on the upper left, you see Zoom, right? Let me just reposition my screen. So you see Zoom on the upper left. Now, Zoom's valuation, $50 billion in June, right? Which was growing exponentially. They came out of nowhere. Who knew Zoom 2 years ago, right? $50 billion valuation in June. And then today, the valuation is over $100 billion. What happened? InterSwitch, one of the top, fintech unicorns that Nigeria has produced. November last year, Visa invested $200 million. Now they're over $1 billion. How interesting is that? How is the pandemic affecting them? How are investors looking to potentially invest in more InterSwitches out there? Of course, Jumia, the first billion-dollar company out of Africa, went public IPO on the New York Stock Exchange. $1 billion when it entered the market, got up to $3 billion, crashed down to maybe $200 million today. What can we learn from that in terms of e-commerce in Africa? Then you also have a little unknown company called Bionic that really never really raised a lot of money. Angel investors, founders investing in them, and then they sold the company to MFS Africa that does remittance across Africa. So what does that mean in terms of new models of companies that are not raising a lot of money? They're not doing Series A, Series D, Series J, Series M, Series Z, right? Instead, they're using their own profit to reinvest, and then they sell the company. So what does that mean in terms of exit opportunity? DPO, so DPO sold to Networks International, I think about $300 million. So M&A activities are also happening. And then lastly, we have Reliance Jio in India. So regions, how are regions playing into the impact of the pandemic? Can we talk about that? And then of course, the last slide, ExxonMobil. Now, this is an interesting story. I saw this chart today, and there's a lot to really, really think about. On the left side is the GDP, essentially the valuation of Nigeria, right? 0.45 trillion naira. Apple is now 2.25 trillion naira. Let's compare that. Secondly, ExxonMobil has shrunk. In fact, exited the S&P 500 at 0.17 trillion naira. This was the company that was the most profitable company in the world for so long, the number one on the stock market in Nigeria. What has the pandemic got to do with this? What are the global megatrends having to do with it? So join me in inviting our awesome panelists today. I'm going to actually invite each one of them to do a self-introduction. We have here today Mrs. Toyin Adeniji, who is the Executive Director at Bank of Industry, right? So from a development bank, quasi-government, standpoint, to provide some context and insights in terms of how this pandemic is going to affect how they invest in SMEs, right? How it's going to affect the types of companies that they're going to be betting on, right? That's going to be very, very interesting to hear. Now, I also have Ibi. Ibi is also going to tell us, I think he's in Kenya. He's going to tell us quite a bit about what they're doing as a venture capital, fintech venture capital organization. How is their due diligence process changing? What are they doing now that they're not doing before? Are they closing up investments? No entrepreneur can come and join? Or is it a case where they're actually doubling down, and want a lot more entrepreneurs to join on? So I know today we have several entrepreneurs and other investors who are looking to hear more about that. And then my egbon in this game, Mr. Tommy Davis, TD, welcome here today from an angel investor standpoint, which I'm also going to group the, what I called in my intro earlier, the family and friends, or fools, family and friends, money that really jumpstarts all these ideas. That's a missing part that people don't really talk about. But without people like you, without the awesome network that you're building across Africa, maybe people like AV will not have enough companies to invest in. So join me in welcoming the panelists today. And I'm going to start by having Mrs. Adeniji kind of just give a personal introduction and maybe just like a 1-minute intro of what they do at Bank of Industry.
Thank you very much, Bumi, and I'm very delighted to be invited to share our little 2 cents in this space, in this meeting, in this webinar. And so also happy to be speaking with the other panelists, some of whom I know. So good to be here. Toyin Adeniji, I'm an executive director with the Bank of Industry. And the Bank of Industry I would want to say, the most active development financial institution in Nigeria. And we really have tried in our 60 years of existence to really cut across various sectors, more traditional in sort of big, heavy manufacturing, brick and mortar, and just, taking really traditional loans at best. In more recent years, we've forayed into what I would like to call, first of all, the private equity space, and then also using or recognizing the great importance of technology. So what the Bank of Industry traditionally does is to give credit to these big companies, also to even SMEs, but all in sort of very typical and fairly traditional spaces. Today we have invested, again, as I said, foraying into private equity. So we are becoming more active in less traditional space of private equity. Fintech is the focus area. And reason being, we all know that even pre-COVID, Fintech really is, I think, the biggest disruptor, but also the biggest sort of accelerator, in the sense that this is what we need to enable even all the sectors that we're working. And so we're also taking a very, very strong stance in that place. We, as I said, it's a foray, it's new, but we're being very aggressive about it. As we go along, I would like to share more on what specifically we're doing in the fintech space. I'll talk about sort of some of the new products we're working on in terms of our tech fund that we're working on. I'd like to talk a bit about some of the initiatives that we're supporting, some at sort of early stage and some sort of bit more advanced. And then more importantly, I'd also like to segue from one of the biggest government programs that VOI executed, which I like to say is the biggest fintech in Nigeria at present in terms of the numbers it has reached and in terms of the kind of KPIs that we're able to tick with that platform. So I'd like to talk a little bit about that and segue that into some of the newer things that we're doing. Post-COVID, or I guess we're not quite post-COVID yet, but again, what are the things, the way we're looking at that portfolio, the way we're looking at those investments? I would say it's better. Nothing has changed. We can't stop. As we can see, even outside of the work or outside of the investment area, all economies are trying to get back on track. So some are more bullish, some are less bullish. But again, I'd like to also share about, how are we looking at things, and hopefully it'll be a very interactive session. Thank you.
Thank you very much, Mrs. Adeniji. And I definitely will come back to you and take you up on that discussion about how BOI is moving from traditional to non-traditional. I think that sounds very exciting. So I'm going to take you up on that. Now, I'm going to now move to Evie. So Evie, can you please introduce yourself and tell us a little bit about what AHL is doing?
Yes, thank you, Bunmi, and nice to meet you, Tony and Tomi. Very excited to be part of this panel, especially with my esteemed fellow panelists. So maybe I'm a portfolio manager at AHL Venture Partners. AHL is a multi-asset venture and impact investor. We focus on financial inclusion, energy access, and food access. We've been around since about 2010, and really the type of capital we bring to the ecosystem is sort of long-term, patient, and sort of innovative capital. We meet our entrepreneurs and fund managers, where they need capital and how they need capital. So to date, we've invested in 12 funds. For example, the AfriInvest Financial Services Fund. Most of our funds usually are Pan-African in nature. Some of them have sectoral or regional focus, but we've also, and this is where we spend a lot of our times, we currently have 13 active portfolio companies, and those companies are companies such as Mkopa, Twiga, etc. In terms of our direct portfolio, usually there's a trend more towards East Africa, so I'm definitely happy to bring an East African perspective to this panel, and we're heavily weighted towards Kenya, but we've also done investments in Zambia and Ghana as well. In terms of how we interact with our portfolio, we're very, very hands-on. We don't only provide capital, and I'm happy to talk through that. We're super hands-on in support. We're always sort of part or observer of the board, and we also provide technical assistance, which is very needed, especially in these times. So what I'm really excited to talk about here is really about how we're thinking about how we deploy capital. We're very multi-asset, so we deploy equity, debt, and we've really seen a big demand on the debt side, and I can kind of talk through that as well. And yeah, I'm really excited to be part of this panel again, and over back to you, Bunmi.
Thank you so much, Evie, for that introduction. I'm actually quite excited to ask lots of questions about, Kenya. Kenya gets all this wonderful press, and the Nigerian counterparts, they feel so bad because we're like, we're the biggest market and you guys get all the press. So we're going to talk about that. Also, I think it's quite interesting that you guys invest both in other funds, as you said, as well as direct into companies. So your breadth is actually quite, impressive. And I also like how you, introduce the three themes of your investments in terms of like financial access, energy access, and food access. So I think very, very memorable, and definitely speaks to, would like to really talk about the impact of the pandemic in those markets, right? And how you see the opportunities growing. Of course, at GreenHouse Capital, also Catalyst Fund, we really believe in the cash plus model. It's not just about giving money and then walking away. So we'll take you up on that as well. And then lastly, TD would like to, hear from you. And obviously the angel space is one where it's sort of understated. I feel like there's no data about it, but I feel like without you guys, right? I remember, my chairman, my late chairman, Cyril Odu, gave us our first $500,000, right? And said, Bumi, move back to Nigeria, right? And I did it. Without that single move, we would not have, created GreenHouse. We would not have, spun off 5 companies, invested in 30 companies. So I think the value of angel investors is very undervalued. There's no data about it. And a lot of investors in Africa would rather put their money in real estate, right, than to actually fund an SME. So I'm really going to take you up on that. So seeing Zoom, seeing all this ExxonMobil and all those stats I shared, is that going to change? Are angel investors going to actually start believing in people like us, entrepreneurs like us, that we can actually give them returns? So TD, over to you. Actually, we can.
Thank you.
Yes.
Yeah. Thank you very, very much for that, Bumi. My name's Tommy Davis, and I'm just, a retired systems analyst. And about a decade ago, I decided, because of certain things that had happened, that angel investing was sort of my future. At that time, I didn't know it was called angel investing. A few years later, the World Bank rolled in and told me that that's what I was doing. But to answer your question, Bumi, I, as an angel investor, personally, like all angels, do 3 things in terms of investment. The first is to spend time mentoring and advising startups. I have a personal portfolio of about 20 startups today. The second is actually to give them access to people like yourselves and other VCs that have a lot of money to invest in terms of networks. And the third and final, of course, is to help them along with a little bit of cash when we can. And I mean a little bit of cash. We invest typically $15,000, $20,000, $25,000 each in rounds of about $250,000 to $500,000. Our focus in my syndicate, which is called the Technovision Syndicate, is really on technology-enabled innovation, looking at essentials. So when we say essentials, food and agriculture, health and education. We look at market platforms. We particularly like mobility, logistics, supply chain. So you can imagine what's been happening with COVID. And of course, enablers like Fintech, software as a service, and business to business. These are all within our gun sight, so to speak. My network is just 20 odd people, 10 local and 10 scattered all over the rest of the world. But we're a member of the Lagos Angel Network, which is one of the growing number of networks in Nigeria. Today, there's the South-Southeast Angel Network. There's a Rising Tide Angel network of women only. And we've got the South-Southeast in addition to Abuja and others. They all come under the umbrella of the Africa Business Angel Network, which now has 50 angel networks in 33 African countries, which has happened over the last sort of 5 years. And I think that's a good enough introduction. I'm more than happy to answer questions related to any of that.
Awesome. Thank you very much, TD, for that. And I think really, again, we have some awesome, panelists in the room. So just because of time, I'm going to be very, very kind of direct and punchy as much as possible in this conversation. So I'm really going to start from Evie. And the question to you is that from the standpoint of, making investments, right? Can you tell us a little bit, just like how have things changed? Maybe against the backdrop of some of the numbers and things I shared, what are you seeing differently on the continent in terms of your, your interest or sector or region that and so how is that influence, and are you seeing a lot more companies coming to you, right? Are you seeing less? Are you deploying more capital? Like, if you can just talk through what is changing, maybe just like 2-3 minutes.
Yeah, thank you. So I think obviously the crisis that came about was really unexpected for most people. I think most investors were, thinking through or beginning some investment processes, and I think for us that didn't change. We didn't necessarily pull the plug on companies that we're talking to, and we kept investing. I think especially around March, April, there was a lot of uncertainty. No one really knew where the world was going, so I think there was definitely a slowdown there. But from our perspective, we didn't stop investing, and I think that was in part because we do have a fixed amount of capital that we're trying to deploy out there, but we really did believe that it's the moment now to support the companies across the continent that are creating a lot of employment, and it's not necessarily the right time to pull back. I think in terms of our investment thesis, we've definitely adapted it. We have quite a breadth of investments. We were exposed to, for example, tourism and other areas like that, and it's definitely not a place that we're actively looking into, as we don't know really how those industries are going to change. But we really try to double down in areas, and as Tommy really rightly mentioned, that really provide essential and affordable goods and services. And part of our our energy portfolio, some of our lenders have really done well because they do provide those essential goods and services. In terms of the way we've been working and evaluating entrepreneurs, I think it's definitely changed, and we're continually trying to adopt that. I think one of the most interesting things about being on the ground is you get to meet the people in person, you get to do the site visit. It really is part of the investor's toolkit, and changing that has been really a journey, and I think a lot of investors are going through it. But we're definitely investing. I think particularly we have the ability to deploy debt capital, and we had attempted or tried to deploy some bridge loans for our portfolio companies, and that's worked really, really well over COVID. So actually in the past few months, we've opened that up to external portfolio companies, and that's really thrived. We've had more incoming requests than that's possible, and we think that product can really, really allow a lot of companies that were looking to raise capital or are quickly running out of cash, but are still really good businesses and are just sort of experiencing this temporary COVID crisis, access capital and be able to continue beyond the year or two that they need the capital for.
Awesome, Evie. I think that's really, really awesome. Some of the things I took from there is obviously not tourism, not aviation, more in line with essential services. You mentioned something like, energy, and you mentioned like lending and things like that. So if you're an entrepreneur out there, go and change your slide deck right now. Also, I think it's a very good point that you mentioned in terms of, right, part of when I make investments, right, a lot of times, we kind of pride ourselves in when we have the cash, right? So because we're not an LP-based fund, when we have the cash, we meet, we hang out in Southern Sun, we hang out in 4 Point Sheraton, and you can just feel the energy. You're like, this guy looks like what I was 10 years ago. Okay. You check him out. He says he has these 2 customers because we know everybody. Nigeria is big, yet so small. So you make 2 calls and you say, yeah, that's the guy. Wire the money to him in a week, right? So now it's very interesting that you're saying that is now shifting. I can't feel the person. There's no 4 Points and Southern Sun. So how are we adapting? And I think it's a very good point that you mentioned. So thank you so much, Evie, for that. That is very, very interesting. So I'm going to go over to TD and, kind of move on from there. So there's this concept of the value chain, right? And collaboration. And I really like what the first session kind of spoke about, like, why are fintechs not collaborating? Why are people not collaborating? And this is a gap, right? Because when we can raise the tide, everybody moves up, right? So if the angel investors are partnering with guys like, TLCom that spoke earlier, partnering with like a Bank of Industry, then we can actually start moving startups through that pipe. What are your thoughts in terms of, sort of this big reset if we're going off of what Evie is saying, that this big reset means that we can double down deeper in some areas and maybe scale down in other areas. How can we double down as a basis of the pandemic, but optimize our capital by really putting it on this assembly line that scales companies faster? I don't know what you think about that idea and how COVID-19 is impacting your thesis. Well, and I don't know if you stop at Southern Sun either. You can touch on that.
We met there a couple of times. You've gone on mute. But to speak to your question about the value chain, first is really for us to accept the fact that what we're doing is economic development. And that's why people like the Bank of Industry are part of that chain and why others are critical components of that chain. And if you break that down to problem solving and talent acquisition, then we've got the whole chain, so to speak, that everybody is financing. Where I see the challenge is actually one of who really sets the agenda. You just made a joke about what Evie said, now saying, hey guys, you've got to move into a particular direction. Who incentivizes that direction? Who decides, for example, that edutech is such a critical resource, it can and should be funded and financed so that the kind of work that Sim Shagaya is doing with ULesson becomes the leading edge of that particular direction? Or who, for example, decides that, what we really need to hunker down on is renewables, look at power, and then the work that Orlon and Wibi Bo is doing in that particular area becomes a critical direction to go. That agenda isn't being set. It's actually being done in a plurality and a fragmented way, where we have our agenda. I just shared my thesis with you. If it fits my thesis, guess what? I'm going to put him to my syndicate. My syndicate's going to put some money behind him. And then we're going to go hunting over the next 3.5, 4 or 5 years to find VCs that think this is a great buy. And that circle continues. But if we can get into a situation where there are thematic incentives that we can fall in line with, I think that might be one of the things we start to look at as part of the reset, to put it as you have. I don't know what you think.
No, I really, really love that. And I think you have set up Mrs. Adeniji nicely, right? So, I think what I get
So
what I get from what you're saying is literally, the pandemic is creating these new opportunities, right? We all have our own thematic areas, but we're optimizing now to be able to double down in these critical areas that have huge opportunities. But who is the agenda setter, right? Correct. Either from a government standpoint or development partner standpoint, because once they can set that agenda, that vision, and possibly some catalytic funding, or even by just announcing that agenda, people like you and your syndicate begin to prime up, 25 companies, right? Out of the 25, maybe it's only 5 people that get to Evie's desk, and then ultimately we create more unicorns. So I think over to Mrs. Adeniji to tell us exactly, some of the incredible work they've done around fintechs and the fund they're launching, and maybe the PE firm they've invested in, and if they are truly going to set an agenda for us. So over to you, Mrs. Adeniji.
Thank you very much. And yes, I am being set up for sure. As I said in my intro, I'm always very quick to say that the Bank of Industry is a traditional lender. And so just the fact that we are also owned, we are a government agency and 100% owned by the government, it also sets us, we align with the government a lot. And so you find out that we become implementing implementers or implementing agency for some of the programs for the government. Today we're talking about the Nigeria's Economic Sustainability Program, which if anybody took the pains to read I don't know if it was a 200-page document or more, but we've got Bank of Industry splattered all over it. But let's stay on the fintech and on the tech space. So yes, and I'll talk about the agenda, sort of creation or setting up at the end of my point. Yes, I said we are moving into that space, and the reason that we are moving into that space is it is clear that in terms of looking at the growth of not only SMEs but the growth of our economy, or the growth of some of the sector that would like to support, a lot of them are now going the tech-enabled way. And so there is, it is clear that with technology or with digitization, it's easier to sort of, become more efficient, grow your company. And also in an era where data has become very important, going the way of digitization also creates that, that platform where a lot of data can also be, it also provides a lot of data. So what we have done is that we're looking very closely at this space and saying, how can we as BOI help? As Bumi knows, it hasn't been a very, very, it's not been a very easy journey, because what it means is trying to change not only the mindset internally within the BOI, but also externally, when we have so aligned with a policy that's still very, 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 very sort of old school, if I can say that. So what have we done? I really won't say it started with JEEP. JEEP is a government funded microcredit program that that BOI was the executor. And what we did from the day one of JEEP was to just go drive with technology. I remember when we started, we had a blank sheet. I remember having I think it was a half-day workshop with Bumi and his team. Unfortunately, it wasn't at Southern Sun, Bumi, but we had that workshop where we just said, how do we do this? How do we scale? How do we reach? How do we digitize payments to people that don't have bank accounts, and so on and so forth? And so that was the start of that particular program. But what that did was that it just got my directorate within the bank thinking that, we have to see how we can really, really build on this. And so the idea of just looking at tech-enabled programs started. And the idea also of how do we even fund it, because they're not, as TD said, these are not traditional ways. You don't just, these are start with angel investors. You have to believe in it, and then you kind of take, you sort of take a bet, and then they grow. You help them, and all of that. And so this whole idea of how do we fund this, and so that's why we did the we started we looked at the tech fund, and with the tech fund, the idea is to use that fund to invest in tech-enabled companies. And so, of course, again, it is being promoted by the Bank of Industry, but because that is not where our forte is, it is not going to be managed by the Bank of Industry. And that has advanced now. I'm hoping that in the next, COVID permitting, or even with COVID, it doesn't matter, because we didn't stop work on it. We will have that sort of fast-tracked, and in another, I would want to say 6 weeks, 2 months. I don't want to be held on that, but it is something that is very imminent and will happen, where we start we see this fund, it's a $75 million fund for its first closing, and to start investing in these tech companies. Again, what did that build on? Bumi mentioned that we had invested, we have taken an equity investment, or we had invested, or an investor in a P fund. Yes, again, all of these things are coming together. So we did about a year ago invest in a gender fund, and I can say who it is. It's by Alethea. And so it's a Pan-African fund, but what we have done is we've been able to manage it so that, because as Bank of Industry, we can only invest in Nigeria. So we are looking strictly at the Nigerian portfolio in that fund. And again, today, actually earlier on, we're in an advisory meeting. And so we're looking at quite a healthy portfolio, even in spite of COVID, they're still doing a lot and being aggressive in building that portfolio. So I guess the point I'm trying to make here is that we are in this space, and it is very exciting, but we are still learning. So we did the gender fund. We now have the tech fund. One of the things that we also did in the last few months, I think the last one we did was just before COVID. We had roundtable sessions where we invited stakeholders in the tech space, and so we want to understand what role should BOI be playing. And I think one of the things, maybe they didn't quite say it like we need to set the agenda, but certainly it was clear that we need to have our voice at the table. We need to drive that conversation. And so two things happened. One was that we also realized or learned or co-developed that there was a need for what we are now calling venture debt, which is also not just equity, but venture debt, where we're looking at companies that are going into their second round funding, round B funding or what have you, and how we can now create this product called venture debt to support them. So that's something that came out. The other thing that came out is not quite agenda setting, but really lending our voice to this space. How do we crowd in other sort of stakeholders, other investors? How do we even crowd in the government? And I think that is also happening because there are conversations ongoing now with various sectors in the youth space, in the agri space, in the health space. So there are those conversations coming up. And one of the things that we hope to be able to do is also to pull all of this together and actually be catalytic in terms of agenda setting and in terms of really driving the space forward and growing that, just growing that sector, both in terms of capital going towards that sector, but also in terms of understanding what really needs to be done to really make sure that there's an ecosystem that can allow these companies or these very, very creative institutions or innovative institutions to thrive.
Thank you so much, Mrs. Adeniji. I think that's very, very helpful. I think from an agenda setting standpoint, a lot of what I'm hearing is what the Bank of Industry has done, for example, in investing, in other funds, gender funds, also in sort of this, lending space where you aggregated these fintech portfolios, but then by BOI doing it, potentially, agenda setting, right? So that the collaboration that we need to be seeing, both from a Nigeria standpoint and also from a Pan-Africa standpoint, because I believe Africa Development Bank was also a partner in that. So it's a Pan-Africa scale type of initiative. So I think that is very, very exciting. And with the economic recovery plan, sustainability plan as well, that also creates, an agenda. And I think there's a role that development banks in Africa can play in partnership with, other funds and angel investors to really catalyze and double down on those areas that are areas of need, for the continent. So very, very, very useful. Now I'm going to jump back into to Evie. Specifically, I'm hearing a lot about, debt. And sort of, I'm seeing a theme around, okay, some of these portfolio companies, they need more cash, or there's just this demand for bridge funding or even debt. I think even culturally, some of these organizations, startups don't want to give out too much equity. And so there's this big opportunity. So a lot of our venture capitalists, PE guys are saying, should we go into that space? So I think it will be quite useful if you could touch on, on two things. One, and again, I know we're running low on time, so if you can keep it brief, to talk about sort of this debt space that is complementary to your, to your equity, side of things. And then secondly, what are you seeing in East Africa? Obviously, you have M-Pesa, the volumes I heard is just going like crazy, and having that underlying infrastructure when people are all at home during the pandemic is probably creating interesting opportunities that other organizations who want to invest in Africa are thinking, how do we come in? I don't know if you could touch on those two things, East Africa what you're seeing in terms of debt?
Yeah, sure. I think, and really, as Madam Adeniji mentioned, there is a huge space for debt. And I think you to start with culturally, I think generally speaking, and even if you look at the traditional kind of business leaders, there's always a reluctance to give up part of their business, part of their equity, just generally in the African context. And I think that kind of does even continue for newer entrepreneurs. It's easier to have a conversation about debt than it is about giving away 25% of your business. But I think where we see the potential for debt is in two areas. First, as you mentioned, sort of this bridge debt, especially during this time of COVID, but even just in many of our portfolio companies, we always see that equity takes so long to raise. It takes 12 months, 16 months, especially when you're getting later in the rounds. But a lot of these companies need the cash. They need to grow. They need to keep paying their customers and continue to have that growth story. And really to delay that because you're not able to go through the very, very onerous due diligence steps of certain investors is really unfortunate. So in terms of bridge debt, we've really seen a huge demand within our portfolio and then now externally. And it's also been very capitalistic. It is very interesting from a financial perspective how you can structure that so that for you as a lender you're not necessarily overtaking a lot of the risk. The second type of debt that I think especially in fintech there are the banks which really play at a different ticket size and which require a lot of security, etc. And then you do have some specialized debt investors for loan books. But really for a lender that has a portfolio of about $1 million, 2 million, 3 million, they're really too small for someone to be able to absorb the 5, 10, 15 million that a bank might want to put in them. And I think there's a lot of opportunity in that small sort of kind of loan book lending for investors like us who are very flexible. And I do think especially in COVID time and you're thinking about SME lenders deploying capital fast for the businesses that need it, it's really, really an opportunity to use a fintech to deploy that capital much, much quicker than any government or bank could do and can be very catalytic for that particular space. So I think those two types of product are really exciting to us and we're really looking to partner with more investors that are looking to deploy those kind of products who have portfolio companies that are interested in those type of products. In terms of East Africa, I think, and Kenya in general, and I think we often confuse the two, but there are quite a few other countries in East Africa, but specifically in Kenya, I think you pointed out right that there is this infrastructure that is M-Pesa, and I think M-Pesa does multiple things. One, it is the easiest way to pay someone, whether you're in front of them or they're 2 towns over. But I think culturally, it's really changed the perspective of how people trust online transaction, or I was going to say digital transaction, and that has really benefited the ecosystem. Meaning that when everyone was holed up in their homes, people ordering online their food or their groceries or any product and paying via M-Pesa was just almost natural. Whereas in other African countries, it might be more difficult to pay ahead or have that transaction digitally. But because people have a decade of using M-Pesa, it's quite useful. But I think there is a lot of dynamism in the economic group that is the East African community. I do think that there is still a lot of countries that are not necessarily as well integrated with others. But we always hear about the big Nigeria, but I think there is a huge market here that can also work out in both ways. Most of our portfolio companies actually work across both geographies, so I think there's a lot of cross learnings that can happen.
Awesome. Thank you very much, Evie, for that. I actually think, and some of the things I took from that is that whereas companies in the past were spending so much time trying to raise equity, there's actually a big opportunity now where they could be raising debt. So instead of it taking 12 to 18 months, potentially you could be talking about a 3 to 6 month process, right? Especially this slice area where the banks are not covering because they're asking for collateral, and then your father's arm and then your daughter's, ankle with it. We know that story. So I think that's an interesting opportunity and something that I think I think, good takeaway from here. I think the second point that you also make that's very important is the role that having the right sort of infrastructure in which like M-Pesa plays that infrastructure, the ability for companies to be more successful by riding on that infrastructure actually creates a catalytic effect. And hopefully that's a lesson that, countries like, Tanzania and, Rwanda and all those different, countries in that region and, East Africa, South Africa, West Africa can actually do, especially on the back of the Africa Trade Agreement and things like that. So those are the two kind of big opportunities that I see. So I want to move to TD here and just talk briefly around, obviously, like risk is, as an investor, risk is your biggest challenge, right? And in a pandemic period, and where you now have to do this virtual screening, right? The question is, how exactly do we risk manage as investors in this type of period, right? How do you make sure that your money is not gone? How do you make sure that the business just doesn't die, right? And how do you ensure that you're making the right bets when you cannot feel and touch the person? Let's assume that this stay at home continues for a very long period, right? Where people are just not going to be having a lot of physical meetings and flying all over the place. Let's assume it's going to get reduced by 50% or 60% over the next 2 years, and we still want to do deals. In fact, we want to do more deals. So I don't know if there are any tools that you have or you're hearing about, tricks to do that, and at the same time manage risks in a sort of post-pandemic kind of period.
Well, the world moved online, and so did we. And it's a double-edged thing. The advantage of the digital world is data. So you can, and I'm seeing amazing and very fascinating ways of capturing data increasingly. From things as simple as crowdsourcing photographs of a particular event, paying through airtime. I freaked out when I heard that, okay? So you can imagine they're giving people 100 Nairas worth of airtime so that you can put it in data, so you can send photographs and you crowdsource that way. So you add that to the fact that you can now put tagging devices in trucks for logistics, the fact that we've got all kinds of data streams that people can bestow us with, and that is the new risk frontier. So throwing AI and other knowledge-based systems on top of data to be able to extract what is relevant for your decision-making process, all of a sudden is no longer that exotic thing crazy people like us used to do. It's becoming the norm. So that's sort of the first, but fundamental principles don't go away. We've been talking about the fact that angels as local investors should be point of first contact, and those should be the people you're backing. Why? Because they're the ones in the backyards of the entrepreneurs. And if anybody's going to know an entrepreneur intimately or have the capacity to actually assess integrity and other principles like ability to execute, they're best placed to do so. So what is starting to happen in our theater is we're starting to see this aggregation, which the first of it came in Trove. I don't know if you guys followed the Trove deal. As an example, where Southeast Angel Networks came along with Lagos Angels, and then the Diaspora Angel Network actually joined to make a triangular investment in this fintech that is a hedge. And what are they hedging? They're allowing local currency Nigerians to actually invest in international stock exchanges legally. So 3 things are happening there. The first, okay, is the use of man no man. I know him, he knows his brother, whatever, however you want to put that, the knowledge network, that's sort of the first. The second is we're getting this richness of data that is coming because everybody's going digital and everybody's homebound. And both of those are combining to lend themselves to and more desk work, essentially. You know, it means looking at more data, more information before you take decisions that you'd have 2 meetings and you take. Now you're going through maybe 4 to 6 hours worth of analysis and checking things out to ask questions digitally to validate your assumptions. And that's sort of where the changes are happening in terms of risk mitigation. So co-investment as an overall strategy is sort of the thrust of it, but data as the basis of decision is how you then de-risk. I hope that helps.
No, that helps a lot. That helps a lot. And thank you for that. What I'm hearing is really this idea that, you know, whereas before we're having a lot of in-person, that you're actually talking about potentially using angel investors on ground who probably gave that first cash, know the investors, the entrepreneurs firsthand as a proxy to part of the due diligence and as part of the quote unquote tool, you know, to supplement your desk research. I'm kind of hearing that. Second one, and then with the example you gave, second one I'm hearing is like data, right? So now data could mean global data, stock market data, what's happening in other markets. Data, we're also seeing incrementally, you'll start seeing that data footprint locally that you can use to probably assess, you know, the startups much, you know, better, you know, which is very, very interesting. And then this co-investment idea, maybe you are investing in logistics in, you know, Angola, right? You know, a logistics company in Angola or in Nigeria, a Kobo 360, for example. But then there's another one, there's a co-investor who has done the same thing in Indonesia. You actually have a better chance of picking the right company and actually having that value add, you know, again, speaking to collaboration across the value chain. That's what I'm hearing, and I really love that. So it may not be tools like, hey, we have this new WebEx or Salesforce that we use to do due diligence, but it's really more like, how do I combine my desk research by connecting with the angel networks locally that actually know the families or know the people that went to school with the entrepreneur or the customers, you know, to be able to kind of get that information, and then the global collaboration piece. So really, you know, really love that. And then my kind of final question before I open it up for Q&A goes to Mrs. Adeniji. And specifically, one of the questions that people are asking is really in terms of, you know, how does an investor look at profitability, right? So as an investor, are you looking at a company that is profitable today? You know, are you looking at, you know, profitability, maturity in sort of this as you're moving away from traditional, right? So is that something that you're now flexible, you know, about as some of your investment thesis, which again, we're talking about BOI and other development kind of institutions across Africa, if they are also making this move, considering they have this agenda setting, you know, responsibility with things. So I don't know if you can comment on that very quickly, and then we take questions from the audience and we get to wrap up.
Well, I mean, I think very quickly, starting first of all with what are we seeing across other DFIs. So we work quite closely with the Africa Development Bank, especially in this space. And one of the things that they've shared with us is that when you're like investments in private equity, you know, or that space are not get rich quickly type investments, because they tick so many other boxes. First of all, it's patient capital. And then at the end of it all, even though they have like 70 different funds that they've invested in, it all averages out quite softly. So some are aggressive, some are not so aggressive. And so it's not a get rich quickly type of situation. Of course, we know that also because of the tenor, it's sort of, you sort of are happy at the end kind of thing. For the Bank of Industry, what we're trying to also avoid the route of direct investments. So that is why we're going into portfolios, and in that way we're spreading our risk, and in that way hopefully our returns also will be more favorable. But when we talk about profitability, yes, that is important, but I think we're moving less. I mean, for the sake of this space, it's less profitability on day one or in year one, because we see that that's also something that is not, it's not, I mean, it happens in some cases, but we know that that's not the focus. The focus is this a space that we believe in? Is this a space that has longevity? Is this a space that also is sustainable? Because at the end of the day, the money that we invest, either through our traditional lending or our not so traditional lending, is usually also, it's sometimes borrowed funds. And so it has to be done with a view of sustainability. So it's not sort of grantish. It's not like 100% risk investment, in the sense that we need to be able to sort of know how it's going to come back. So I guess the sort of very quick answer to that is yes, profitability is important, but we're very mindful that in this space, it's something that you have to have as an objective, but it cannot be the driving factor when you're thinking about that investment.
Awesome. Thank you so much, Mr. Adeniji, for that. So I have a few questions here, and we're going to try and take them very, very quickly. I'm trying to wrap up in about 8 minutes. So the first question I want to take was a question from an attendee. It's all anonymous, so not quite sure, but to TD. You know, the notion that there's not enough data on angel investment and that being a viable option, formalizing it a little bit. Do you have a take on if that's going to evolve, and if there's anybody working on, you know, making that data more transparent, making people know that, hey, start off with small money from angel investors, people that you know, and then they then introduce you to people like TLCom and people like EV and co, you know, and then the chain kind of follows on from there. So is anybody working on that? Do you see that changing across the continent anytime soon?
It's funny. Who are your partners for this particular session? Brighter Bridges.
Sure.
And yeah, we've done one round with them already in terms of surveys as the Africa Business Angel Network. And we are working with them continuously to make sure that, you know, we're starting to get the kind of data that is required. We've also started the Africa Angel Academy. It's currently in beta in South Africa. We're expecting to roll that out over the next couple of years, which provide additional structure to angel investing. I personally, I'm for what I call a city-centric angel strategy. That means we focus more on cities than on countries, because that's how we expect it to work.
Awesome. Thank you very much. Brighter Bridges, that's awesome. I think that tying is awesome. I think that's brilliant. I also, so the second question has been answered in terms of profitability and runway. I think Mrs. Adeniji answered that question, that even though it's important, it's not the first thing. It's now more about thinking about how you grow into that profitability and the long game. The next question is, how can we have more Pan-African collaboration in the investing world to match the rise of foreign VC investment? So maybe I should have, TD, did you want to answer that, or have Evie answer that? Or both of you actually?
Evie, please, go ahead.
Evie, go ahead.
Oh. It's an interesting question. I think I would love to define what that person means by Pan-African collaboration. I think truly in the world that we're in, most LPs and most funds come from such varying places. You know, you will have like a Bank of Industry or AFDB type of investor as an LP, but you will also have foreign LPs that are part of the funds. But I do think that there is like more and more so a lot of collaboration across different funds across Africa. Most of our co-investors are actually both African and Pan-African. Most of our portfolio actually have a strategic investor, which is a local company within the line of business that we're working in. So I think that this is already happening. I don't think we should necessarily look at foreign capital coming in as LPs in funds or in investments as a bad thing. I think it's always good in this globalized world to bring in other investors with other perspective, especially strategics from different countries that can support the portfolio companies.
Did you want to add to that?
Yeah, the more you grow your local angel investment base, the better off you will be in terms of having local investors. It's a challenge we've been facing for a number of years. It is one we need to crack. If we're going to crack economic development having local input, then we're going to need to find more people who have succeeded, people like yourself, Bumi, and others, who are actually betting on the next generation. It is fundamentally important, okay, for us in terms of maintaining anything African, so to speak, is to find people who invest alongside us, not instead of us. What has been happening historically is people have been investing instead of us while we've been focused on consumption. And that's what we really need to change, is get our people into the habit. You know, I mean, we do $5,000 deals. We're not talking of, you don't have to be Dangote's millions before you become an investor. We're talking of sacrifices for the next generation. It's very, very fundamentally important. I cannot overemphasize it. I'm sorry, I'm getting a bit emotional. It's back to you.
No, valid points. The power of local investors and participation is very, very key. And I know I need to really wrap up. There's just one other. So Evie, can you answer, what are the 3 top challenges you face as a VC provider and debt provider? Top 3 challenges.
Sure. I think quickly, I'm going to make these mostly COVID related. I think one is building relationships with entrepreneurs. It's obviously really difficult as there's not that many networking events or ability to just catch up with someone and get to them personally. In terms of the other point, which Tommy really pointed out really well, is access to data. I think a lot of companies, when they focus on fundraising, they will only give you their financial model, but there's so much depth of data that someone needs to have access to. Cohort analysis, how are your customers spending, who are they, etc., that we don't necessarily get. And I think the third one, I think right now, currently, in terms of early stage VC, I think co-investments is a must, but it's really difficult, again, to have, as it's really hard to kind of, continue with other investors when you're not seeing them in person, right? So you really have to carve out the time and write a lot of emails to make sure that you know what's going on.
Got it. The last one, to Mrs. Adeniji. Top 3 challenges as you're setting up your fund, as you're the new tech fund, as you're looking to invest more, and as you're looking to set the agenda.
I think top 3 would be changing the mindset, both internally and externally, especially internally, the way we do things, externally, setting the agenda. I think another challenge is also trying to it's innovative for us. So we really would like to also complement this tech fund with the venture debt, because that also gives you a better time frame. So even though we're in for the long haul, going into PE where you have to wait for 5 years plus 2 or 7 years plus 2, to start thinking of other creative ways in which we can still achieve the same purpose without doing that full haul.
Awesome. So this brings us to the end of the panel session. Really, really enjoyed this. I wish we had one more hour, to really go at this and go into a little more details. But I'm sure with the Catalyst Fund, GreenHouse Capital, we're going to bring this back again, because I think there's really a lot more to talk about. So want to thank you, Mrs. Adeniji and the Bank of Industry. Want to thank you, TD, representing the Angel Network. I want to thank you, Evie, for bringing a lot of insight from East Africa, as well as, the venture capital private equity space. So I'm going to pass it over to Nosa now. Thank you very much to our panelists, to our audience as well.
Thank you, Bumi.
Thank you very much, Bumi, and thank you to everyone on the panel. I'm sure our audience had a lot to learn from that session, so thank you very much. So we have pretty much run out of time, but before we wrap up, we're going to quickly have one more poll. I think it's just going to take us a minute or 2. So if we can have the other poll, like I said, this is powered by Brighter Bridges, our insights partner. So very quickly, we have 2 questions here. So if we can have responses, and like I mentioned, this poll, the results will be collated by Brighter Bridges, also analyzed, and everyone will have it shared back as a visualization, as a data visualization after the event. So if we can quickly, in say the next 30 seconds or less, it's just 2 questions with 3 options each. So maybe I'll give like another 10 seconds. Okay, thank you very much. Great. And then before we end, we want to have a final poll just to hear from you, the audience, about your experience. It'll be great for us to have this feedback, especially as we prepare for tomorrow's session. So can we just have the last poll of the day for the audience? So just audience, this is your time. Please tell us how you felt about the sessions today, and we can make sure that we improve and definitely give you a much better edition tomorrow. So please, I think we have just about 40% that have voted. I'll give a few more seconds. Keep them coming in, people. It's just 1 question. Okay. In 5. Okay. Thank you, everyone. So thank you very much to all our panelists for attending today. Thank you so much for all the attendees. We will have another session. So day 2 is tomorrow. It will be starting at the same time at 1 p.m. WAT. We have 2 exciting sessions tomorrow. So one session is on corporates. We will have MTN, we will have EcoBank, we will have PalmPay, we will have Wallet Africa. And then the last session will be on fintech innovations for the digital generation. We will have a VC that has worked across Africa and India, so a lot of cross-market learnings there. We will also hear from fast-growing startups in India as well as in Nigeria as well. So I hope to catch you same time tomorrow, and I hope you had a good time. From all of us here at Catalyst Fund and GreenHouse, it's thank you so much and bye for now. Do enjoy the rest of your day. Welcome, distinguished guests, ladies and gentlemen. It's my pleasure to welcome you once again to the second day of our digital dialogue, FinTech in Focus. My name is Nosa Omusi. I'm the country manager for the Catalyst Fund for Nigeria, and I will be your moderator for the day, and I'll be supported by all the other panel moderators. We're so glad you could join us today. Yesterday was an amazing day. I will basically just give you a bit of a recap. So for those of you who missed out and for those of you who would like a refresher. So yesterday we had the welcome address by Mylis Carraro, director of the Catalyst Fund. We had a welcome address by Bumi Akiyemiju, founder of the Venture Garden Group and GreenHouse Capital. And we also had an address by Lami Adekola, who is the Director of Financial Services at the Department for International Trade. Our keynote was taken by Ido Sum, who is partner at TLCom. We had 2 great panels yesterday. The first was by Catalyst Fund, and it was titled Opportunity in Crisis, Digitizing SMEs for Post-COVID Recovery and Resilience. And the second by GreenHouse Capital was titled Rethinking the Portfolio. So for today, we are sure that we'll have an even more exciting lineup. We have a lot of great panelists, and personally, I cannot wait to get this discussion going. So I will talk you through the agenda for today. While I'm at this, please feel free to use the chat window to tell us your name, what organization you represent, and what city you are joining us from. Thank you very much. So our agenda for today, we will start off with our first session, which is called Creating Shared Value in Uncertainty. early expansion, pivots, and partnerships. And this will be by GreenHouse Capital. And we'll have our second session for the day, which is session 4, Fintech Innovations for the Digital Generation, before we go on to our closing remarks. So before we get to the sessions, I would like to ask you to join us in building out some insights. We have partnered with Bridges. Bridges is a data-focused research company which specializes in emerging markets. And we thought to use this opportunity of having such fine people in the room like you from diverse backgrounds to be able to generate some insights, which will be put together and shared with everyone at the end after the event in form of info and useful information. So we do invite you to help us creating these insights so we can have a clearer picture of what the thinking is in fintech in emerging markets at this time. So if we could please just get ready, we'll start with the polls now. Great. So we would like to know, and this is especially for the corporate, so if you are not a corporate entity, you may want to sit this one. As your company for expansion plans. So you have the options there. And the second question, if you offer support to startups, how is it delivered? Please, I encourage us all to please vote. Like I said, this will definitely help us form some insights with the help of this Brighter Bridges, and we will be sharing this data back to everyone as opposed in event engagements. So I think I will allow a few more seconds. It's just 2 questions, we'll be able to get to them through them very quickly. Thank you very much. We still have a few people in the room yet to vote. And I think we'll close this poll in 5 and 1. All right. Thank you very much, everyone. Great. So without further ado, I would like to call on the moderator of our next, for our first session for the day. I call on Ruby of GreenHouse Capital.
Thank you so much, Nasser. Welcome everyone to our first session of the day. And thank you so much for taking the time now to join us here with GreenHouse Capital and Catalyst Fund. Just some quick housekeeping. You'll see the Q&A box in the bottom. Feel free to answer your questions throughout the period of time, and we'll consolidate and do our best to answer those questions at the end of the session. So let's get stuck into the session. The first one is going to be talking about creating shared value in times of uncertainty. And I've got an amazing rockstar panel here with me. We'll be talking all things related to pivots, early expansion, corporate partnerships, and every hairy question in between. So without further ado, I'll quickly introduce myself again. Ruby, I'm the principal investor at GreenHouse Capital. And let's get our introductions for our panel started. Jiva, please go ahead.
Hello, can you hear me well?
Perfect.
Yes. Thank you, Ruby. Hi, everyone. Thank you for joining. So I'm Jiva Diallo. I'm the Senior Fintech Advisor for EcoBank, and my role is to facilitate partnership between fintechs and EcoBank in Africa and beyond. Thank you.
Thank you so much. Elsa, please.
Okay, my name is Elsa Mizrini. I'm General Manager Commercial for MTN Nigeria Fintech. So excited to discuss the existing and future relation of MTN with the fintech industry in Nigeria.
Thank you so much. John, you're up. John, you're with us?
Yes. Hello, can you hear me?
Yes, we can.
Okay, I've been on mute for a bit there. So hi everyone, my name is John. I'm CEO at Wallet Africa. Wallet Africa is like PayPal for Africa. We are building financial services for a new generation of Africans, and we're able to do that by working with really smart bankers and payment processors all over the world. It's a pleasure to be here.
Thank you so much, John. And last but not least, Sophia.
Thanks, Ruby. Hi, everyone. Great to be here. So my name is Sophia Zab. I'm the Global Head of Commercial and Marketing for PalmPay. And PalmPay is a Pan-African digital financial services company. We're currently live in both Nigeria and Ghana, and we've got other country launches coming up soon.
Amazing. So let me quickly get started with some of the easy questions because the curveballs are coming. Okay, so based on all of the craziness that we've had in 2020, obviously this panel is really here to discuss, you know, some of the ways you guys have navigated some of these challenges that we faced. And obviously every company in this situation globally has faced kind of these challenges and obviously unforeseen. So I'm going to get started and put John on the spot. I'd love to really briefly hear kind of 3 things around how your company has thought about pivoting, expanding early, or shifting your approach in order to kind of overcome some of these market challenges. Have you guys thought about new ways of interacting with the market, for example? And my 3 kind of questions here, and we'll move on to Sophia next as well. How did you guys determine what to do in uncertain parameters? Number 1. Number 2, what did you guys actually end up doing and what were the lessons learned behind that? John, you there? Why don't we switch over to Sophia first, and then when John's ready, we can come back to him.
Sure. So the question is about how do we respond to risk, right? So I think COVID has obviously been an unexpected event for all of us. In our particular case, it's actually been something that has catalyzed more adoption for digital financial services. So our growth has gone up as a business, but clearly because of this general market uncertainty, we've not hired as many people as we otherwise would have, given the growth that we've experienced, because you can't look ahead so much. And although we've not really done any pivots in the business model itself, we've made our operations a lot more efficient, and we've kind of changed the approach there, because, you know, we just have fewer people to do more things now. So one of the things that we're thinking about doing is bringing more AI into our customer service, seeing how we can employ chatbots, for example, rather than thinking about hiring hundreds of people. To your questions, how do we determine what to do in uncertain parameters? I think that as a startup, you're always operating in an environment of uncertainty, and the way that we approach that is just being very data and experiment driven. So that's been the case before COVID, and it's not really changed afterwards. I think maybe it's just something that we're paying a bit more attention to, and we're actually communicating with our customers directly more closely as well. So we've opened up like Facebook groups or subgroups to talk to them and just really get that direct feel of the market, in addition to looking at the high level data. Hope that answers.
Yeah, and what were some of the lessons learned from that? Have you guys faced some sorts of challenges as you guys have kind of navigated through, you know, either implementing those types of solutions or whatever?
Yeah, I think one of the things is that until, like, being in a challenging environment forces you to innovate. And perhaps in a way, we've even taken things that we would have seen as a risk now that we wouldn't have before. You know, there's marketing channels that have always worked, so we kind of just doubled down on what worked, and now we're thinking, how can we save more money, how can we be more innovative? So we've actually seen our CPA go down as a result, because we decided to switch channels off and try something else, which probably in a normal environment where everything is business as usual, we might not have made that decision.
Yeah, that's really interesting. I mean, I'd love to hear, obviously PalmPay is backed by you know, quite a large investor, and we'll kind of talk about that a little later. But I'd also love to talk to maybe a slightly more early stage company, John. Just trying to reiterate those three things. So again, what were some of the parameters that you guys had faced? What were some of the challenges you guys had faced during these uncertain times? And what were the lessons learned there?
Thank you, Ruby. So before now, we used to be a partially remote organization because we needed people to be in the office to get some things done. So that was a huge challenge for us when COVID hit, because we went fully remote first. How we optimized for that was start having team meetings weekly over Zoom, then daily stand-ups over Zoom, so people are communicating with each other and talking to each other. In terms of that's operational. In terms of transactions and customer behavior, COVID has been good. I think most people on this panel will agree and I feel a little bit guilty saying this, but traditional financial institutions not being able to open kind of reiterates what we've all been saying about digital financial services for a while, that lots of these things could be done over mobile. In terms of expansion or things like that, we've always paused that. That's a little bit ambitious. I've left it for Sophia and the rest to try to go into new markets during the pandemic. We're just trying to watch our own bottom line and stay profitable right now. Then what is going to I didn't get the third question. Can you repeat it again, Ruby?
Sure. What were some of the lessons learned or some of through the challenges that you guys have faced?
Okay, lessons learned. Being lean pays. Really, swear. Being lean pays because the overhead is just way lesser should you need to do a quick pivot. I'll give you an example. We went to start serving businesses late last year, and since then it's been it's like serving an entire different customer segment from what your core business was. And the only way we were able to pull that off really quickly was because we were lean. I can't imagine trying to do that when I was in a much larger financial institution, if you get what I'm trying to say. So being lean pays. Please, everybody, go remote first. Your colleagues will like you for it. And yeah, really, really interesting.
Thank you guys so much. So I'm going to flip to the other side of the equation. Obviously, companies like MTN and EcoBank are, huge players on the continent. And so how have you guys essentially navigated with some of these uncertain times? And again, what were some of the lessons learned as you thought about solving for those uncertain parameters? I guess I'll start with Elsa first.
Okay. So as John said, yes, I mean, COVID has been good for MTN Fintech. I think in 3 months, we moved from 3 to 10 million users of Momo agents, which is a service we currently run in Nigeria. So yes, I mean, I think because when you think about this Fintech, and agency banking, which is what we authorize to do today as MTN, is a proximity business that run on very light, right? Is to do financial transaction at the retailer next door, which will still be open when the traditional financial institution had to close the branches. So de facto, it has helped to grow the business. But I think for big institution like MTN, the fact that MTN Nigeria is willing to become the biggest fintech on the continent and so on, COVID is not going to decrease this ambition. I think it's maybe more on the how we are willing to do it and also what kind of collaboration with the different actors. When you think of Paga in Nigeria 10 years ago, they can launch all the value chain from distribution, product, payment. They actually launch everything. I'm thinking maybe a Paga today, facing to that uncertainty and maybe risk of currency devaluation, Moscow and so on, might have done the different choices. I see OPE. I think if you see OPE OPE that early 2019 was doing everything, riding, OPE food, the wealth management, so on, has now decided to refocus only on agency banking. So you can see that the player maybe are going to try to refocus. So I think for MTN FinTech, maybe it's an opportunity to, as we might end up to actually being granted by CBN its payment service bank license, PSB, is maybe for us to, instead of like investing in all the verticals, to focus on the core asset. MTN FinTech will be like the strongest distribution of financial services. Maybe the bank will more focus on the loan product or like applications that are closer to the business. And the FinTech are there to actually thrive on the product side and build more partnership with the banks and the telco. Maybe it can actually sort out and more like sort of that extra competition that is coming from the fact that everyone wants to do everything. MTN wants to do everything, banks want to do it, FinTech wants to do everything. So maybe it's an opportunity to move to organize a bit more the industry.
Yeah, definitely. And I think it would be interesting to hear from Jiba, if we've still got you. I think, you know, navigating some of these challenges, I think you're right, Elsa, where you actually may not necessarily be able to directly compete, but actually perhaps there's an opportunity within that to partner to do any of that type of cross collaboration with some of the fintechs instead of trying to build everything, I suppose. I'm going to hold that thought because I'm going to talk to you about that a little later in the session. But Jiba, I'd love to hear how EcoBank has sort of weathered some of these challenges as well.
Yes, so yes, really, I'm still there. So I think I don't want to say that COVID-19 was a good thing, because obviously it was a health sanitary. Almost all the countries in the world face very big issues. But one positive thing that came out of this is that everybody understands now that yes, technology is a good way to keep working in certain times, and it kind of forces many organizations and many companies and even individuals to go in touch with others and businesses. I think we also that very interesting poll asking to CEOs what was the main reason why they went digital, and most of them said COVID-19, obviously, because they had no choice. So it was a big threat, but at the same time, it kind of opened doors for opportunities. And I believe many fintechs and many startups in general understood that and took the opportunity to innovate more, as some of the panelists were saying earlier. On our side at EcoBank, we clearly kind of show that our strategy is to become a bank as a platform. We understand we are a big organization, as you say, in presence in 32 countries, thousands of employees and millions of customers. So it's always quite difficult to move those kind of machines, quite cumbersome, but we still want to create more digitized solution and be more innovative. So we clearly understand that the best way for us to do so is to partner with fintechs. So we finalized the FinTech Challenge, the annual competition that we have. We finalized it a few weeks ago, and we had 10 finalists from across Africa with very interesting solution. And now we are in the process of, having discussions with many of them to see how we can move forward and partner. One of the reasons why when we discuss with fintechs, one of the two main reasons why they are interested on partnering with EcoBank is, first one is to kind of leverage the wide geographical presence that we have in Africa. And the second one is because they are tech corporate companies. So dealing with regulators is not always a very easy thing for them. And they want to rely on the relationship that we have with those institutions to make it easier for them. Ruby, can you still hear me?
Yes, we can.
This one. Yeah, so
I think you've set up for our sort of my next question, which I think would be a great sort of transition there. You know, I think we've seen sort of a whole host of, I guess, accelerants or accelerating market forces that ultimately end up sort of pushing companies and especially large organizations to innovate and to tap into new markets to stay ahead of the competition. And a lot of that competition was obviously smaller, more nimble startups. And so, you know, while corporates, there are sort of two approaches for corporates to innovate, right? They can either pursue, I guess, internal incremental change, really building themselves over time in response to global competition and in response to disruptive technologies. But I think the others that have done really, really well have obviously built their innovation engines by collaborating with startups. And so I think I'm going to start with Sophia, just because I think with the partnership that you guys have in PalmPay backed by Transsion, I'd love to hear how some of the, you know, fresh off the heels of new investment as of last year, pretty powerful backing from Transsion, and also a fantastic partnership with Visa. How have these things played into, you know, building a large scale kind of expansion strategy? How are you guys looking at it, both from the Transsion side and the PalmPay side for partnerships?
Yeah, I think, you know, you've correctly underlined that PalmPay is kind of looking at it from both directions. So on the one hand, we are a startup that is being supported by a corporate investment. And on the other hand, we're also building out an ecosystem ourselves and looking to work with startups on that. We've always been very ambitious. So we've started PalmPay with the ambition to grow to a Pan-African payments company. And so that has informed also who we partner with and where we got our investment from. And Transsion, being the manufacturer of over 50% of all the smartphones sold in Africa, is obviously a great strategic investor and partner for us to have. And we're working with them on multiple levels. We're going to be pre-installed on all of their devices. They also have a really large retail network across Africa that we'll be able to leverage as we build out the agent network and our merchant networks. And then Transsion also has other investees and portfolio companies and business units, and they'll be facilitating for us to build partnerships with them. So then on the other side, for us to be the biggest, I think we really need to provide the best experience and value in the market and also the best choice. That's how we get everyone onto our platform. And our approach and our thinking behind that is to try and build a marketplace. We don't want to do everything ourselves. We don't think we need to do everything ourselves because there's so many great locally run startups already in the market. And I think that we can offer them access to the distribution that I've just described. And it's just, you know, to John's point, small startups may not be willing to take on the risk and invest in entering new markets. So we can be an on-ramp for them to try new use cases, for them to expand to new markets by investing in getting the licenses ourselves and doing the KYC right and getting all the payments to work smoothly. And then that means that we can focus on our own core product value, but then that also enables the startups and the billers and merchants and other companies we work with to do the same. So I think it benefits everyone in the industry.
Yeah, and I guess Elsa, I think also, you know, some of the things that MTN is doing with the API project, what is the internal thinking, and I guess where do you see this going in that sort of post-COVID recovery world? Do you think it would become an accelerated project, an initiative? How, you know, what is the internal sort of MTN, I guess, roadmap and thinking around this project?
Okay, I think it's actually started even before COVID. I think for business like MTN, like investing, M&A operation, and so on, are very complex operation that MTN doesn't have the governance to actually do it the way the way, I don't know, Catalyst can do it, or even PalmPay, right? So I think that it's API, open API structure and so on, has become the enabler, the tool for MTN to accelerate partnership. And especially, I think it's even more needed on the fintech side of the business of MTN. And this is what is going to transform also the GSM side of the business to accelerate the API agenda. If I have a look at what is happening in the business today, it's actually following fintech, the fintech appetite to open the API, to accelerate the partnership agenda that has actually pushed the GSM side to also open data API, USSD API, SMS API. So MTN is definitely moving there, and I would say like push by the fintech side of the business. I see it as a very, if I take the Ugandan use case, right? So Uganda, MTN Uganda, we were the first country of MTN launching open API for mobile money API. When I look at it, typically the example is before, when actually MTN Uganda mobile money was willing to do a partnership with a fintech, time to market was about 3 to 6 months. You know, you have the contract discussion, technical integration, complex product infrastructure, and like convincing internally through the 6 months. So by plugging the API later, we could actually move from 3 to 10 days. So, I mean, this is extreme, right? So you actually like, you enable yourself to potentially do like 50 to 100 more partnership than before. If you run properly, that's the type of ambition that I think MTN as a fintech would do. Is that ability through an API layer to like quickly onboard the maximum of new service provider that can benefit from the distribution of mobile money that we'll have set up on basic service like cash in, cash out, payment, disbursement. So I think, yes, COVID is an opportunity to accelerate this agenda, even if it is started before. And I think in Nigeria, specifically for Nigeria, is very important because the quantity of fintech innovators that are already there is really like, it's a missed opportunity. If you don't roll out an open, and if you're not willing to do partnership in the setup of Nigeria, I don't see or big players like MTN or banks can succeed.
And I guess it also taps into the space of financial inclusion, right? Those who can't necessarily get access to typical fintech services that require, you know, BVNs and whatever else, where they have to be pre-banked, I suppose.
Yeah, absolutely.
So what about the other side of this relationship, right? So obviously, we often find startup relationships and corporate relationships, they start off really positively. It's a joyous like honeymoon period. Both sides see kind of early successes. And then over time, obviously, there's a bit of frustration that can set in, right? And both partners have to sort of wake up to this reality of not necessarily achieving what they set out to achieve, or navigating kind of this large organization, or that large organization trying to accustom themselves to really fast, small moving, potentially slightly unorganized startups, right? So how do we actually make this marriage work? And I want to hear from Jiba and John, because I know you guys are currently partnering as well. So I'd love to hear about that experience, how you guys have also, you know, I guess made that marriage work.
Okay, so should I let John respond first?
Go ahead, John.
Go ahead. Okay. So there's always a strategy when it comes to dealing with big organizations. And from my experience working with the banks, if you make the project look small, it's going to get small prioritization. So you might as well make it, you know, something that's like, you know, significant. And if you look at the scale of what we are doing with EcoBank these past 2 years, that way I can send an email to Jiba and say, see, we're going to make a lot of money and get rich together on these projects if we work together on this. But jokes apart, another interesting part is lots of these executives in banks, they also have like, you know, targets for working with small organizations, fintechs especially. If you look at what we've been able to pull off with EcoBank the past 2 years, as well as other banks in Nigeria, entities like Visa, you see that it's also part of some sort of KPI for lots of these executives. And if you're able to like speak a language to some extent that they understand, I think I've been working with Jiba since 2017 when she was at Microsoft. So the relationship also helps as well. But like I said, it's always helpful to make it something reasonable. And that way there's also like time for them to like look at this. Then you can always find someone within the organization that's their KPI, and you just like work with that person. So that always helps. And Jiba has been helpful from the EcoBank perspective, even to close deals in places I've not gone to yet. She really introduces us to them.
Thank you, John. People will think that I pay you for saying that. No, just joking. So I think on my side, what I could say is that we have various ways to identify and partner with fintech. So the fintech challenge is one, and we have a very good companies such as Wallet from John that we are partnering with. But the reality, because we need to talk about the reality, is that it's very difficult for these small companies to navigate through banks such as EcoBank because of the size of it. So having someone inside is important, and that's why I joined the bank. But on the other side, we keep having many other companies trying to work with us. And as I was saying in the beginning, for us as EcoBank, it's clear that we want to innovate, but we know many innovators are out of the bank, and we want to partner with them as easy as possible. And what happened is that when you are one fintech and you want to work with a bank such as EcoBank, you have to send email, find the right people, navigate through the organization, start the business discussion, show the value that you can bring. And as Elsa was mentioning, it could take months or even years. So a few months ago, we decided to change the approach and to make it easier, at least on a technical standpoint. And that's why we start the work on having our sandbox with our APIs published there. So I'm very glad to say that we now have our sandbox live since 2 weeks now, and we are already overwhelmed with requests from fintechs, and we are very, very happy about that. So the goal here is to say, look, there's the business side and there's the technical side. On this technical side, it's almost always the same thing. You just need to do integration between your system and ours, but it's always very time consuming on both sides for your team and our team to have discussions. While we all know that we just need to have APIs or integrated and things work together. So we already have many APIs published. We are adding more. We keep improving the platform, but we already have a good outcome so far. So on the technical side, you do integration once, and the beauty of it is that because we have presence in 33 countries, we are opening up the market to those fintechs to 33 countries in Africa. Of course, each country has its specificities because of regulations, which is, I want to say again, very important for banks. That's the reason why we are banks, is because we talk to regulators. So we have to take into consideration those specificities per country, but at least we are facilitating the work. So same that was what Elsa was mentioning earlier, instead of spending months or even years having discussions and doing that integration, we are now moving from to a few days or a few weeks to be able to partner with fintech. So I believe that it's the way to go. All the big companies who want to partner with innovators understand that we need to become a platform. And I think, John, you may recall when we were having the meeting with the EcoBank Group CEO a few years ago, and someone asked at that time, one of the fintech asked, what would be your dream? And he said, my dream will be to build EcoBank as a platform for innovators. And that's where we are now. So I'm very happy that we reached that milestone, and I'm very much excited about the partnership that we are going to build with this.
Yeah, thank you. I'm going to switch to, I guess, Sophia and Elsa to answer sort of the same question. How do you guys make that, that relationship work? And what are some of the difficulties, right? So, as MTN is building kind of this ecosystem, you're obviously working with very, very early stage companies, and they need to navigate and almost have a set of readiness attributes before they can actually be launched through MTN potentially. How do you guys think about readiness, and how do you support navigating through the MTN ecosystem?
Okay. So I think in the former world, before setting up an open API platform, that would be a difficult choice, right? Because should I be everyone is selling like the dream of a big partnership, how much you're going to bring to MTN as a fintech, but there are many, and many of them will actually being able to sustain the time for MTN set up a decision and actually willing to help to grow your business, right? So that's the former world. But I think the interesting side of Open API is that, so I think, Jiba, you rightly said, technically, you can like simplify like the approach, but I think even commercially, the way we have launched MTN Open API, I think now it's live on 6 different countries: Rwanda, Ivory Coast, Ghana, Uganda. So I'm missing the last 2, and very soon we'll do it also in Nigeria. That even the contract, right? You download the contract, you upload the KYC with the certificate of incorporation, the contract that you have signed off, and you get like the standard commercial that applies. So actually, my goal is I don't want to see you. You do it everything yourself. You use the API. You conclude the basic standard contract. No need to meet anyone at MTN. I think that's the beauty of the tool that is used at its maximum. And then we can enter as. Let's imagine then that we can have that discussion. You have integrated. You start to go traffic, and in 3 or 6 months, we say, "Wow, this fintech is really like growing the volume in a way that is really different from the rest, right? Can we actually meet now? Can we discuss? Can MTN like help you on the USSD cost, on the SMS cost? Can we like actually think about participation to your communication plan and so on?" And this is where we have the opportunity to sit. And I see it as a good opportunity for fintech that is eager to go live quickly, to quickly test something, actually do and actualize some positive results, versus like to wait 3 to 6 months that yes, maybe the big bank or the big telco will sign off my contract. So I think that's up to where we should push that logic of the open API. And to the bank, and I think, Jiba, this is another one for you. I think as big corporate, as we set up those API layer and so on, can we also see if we can avoid everyone to do is silo, right? API of the telco will work that way, documentation will set up that way and so on. The bank will set up a total different way of like offering the API, structuring the documentation, making. Can we try to even like standardize between the big corporate an approach of the way we are building our API, the way we are offering documentation, and maybe start to build bridges between the two. So at the end of the day, for the developers, for the fintech, it becomes easy to actually connect with the big players and in a way that is a bit seamless, instead to have to duplicate different efforts with the different partners. I think this is something that is that we need to think about as the big guys in the room.
Awesome.
I need to respond to that. Sorry, Ruby. It's very well, Elsa. It's amazing because not only yesterday we were having the discussion with the operation and technical head and the group CEO of EcoBank, saying, "Okay, we're very happy now. We have our sandbox. It's very good. How can we build more bridges with other organization in the ecosystem, such as MNOs and telcos?" It's very important because we are all dealing, with the same companies. Only yesterday. So Elsa, I will definitely reach out to you to see how we can make it happen more easily. It's very good that we're having this discussion now. This is coming at the right time.
Fantastic.
That's awesome. So you kind of also touched on, you know, one of the elephants in the room often with partnerships is the sort of commercial aspect of the partnership. And I don't know if I'm allowed to ask this question, but I'm going to go with it. So integration with a partner obviously requires things like upfront costs, you know, launching, marketing, getting everything kind of in that readiness state to be launched to the level and to also be able to account and serve the type of customers and the number and volume of customers that an MTN or an EcoBank would have. How do you guys actually think about the actual commercials, right? And so do you guys have you guys experienced things like revenue sharing, or do you guys go into sort of JV structures? Can you give us an example that's shareable and an example of maybe a success story? And I guess I'll direct that to both Elsa and Sophia.
Sure, yeah, I don't know how much information I can actually give out, but how we look at readiness is, so the approach that we've taken to build out a platform is obviously, we are also doing an open API, but we see value in building direct relationships and direct integrations as well, because we believe that that can lead to a relationship and actually lead to joint innovation. So for example, you mentioned earlier that we have a partnership with Visa, and that is a general partnership that we have with them, and we're developing products together. So in Ghana, we just launched a virtual card, and we've decided to give people cash back. So it's kind of like an Amex card on PalmPay, which I'm not sure that anyone
I think we've maybe lost you, Sophia. I'll get back to you on that. But Elsa, do you want to touch slightly?
Okay. Look, I think outside of the revenue share, what are the other potential way to agree on the commercial, right? So I think with the strength of the brand of MTN, there's a lot about co-branding or stamping that yes, it's a partner of MTN is one of the things that you usually bring in a partnership. There might be also like, okay, the data access, right? What if your app is like 0 rating between a certain period of time? What if like actually we give you a deal on the SMS or the USSD cost? So there is also like all the communication aspect of like that the partner might require from the telco. So I think that's probably the 3 big area of partnership. A good example where it has worked, because as expected, when you have so many things to align for this complex partnership, that is not just about the use of API, but that involve other dimensions. Those are very complex partnership architecture. One that has worked quite well is potentially with solar panel company. I think most of the big telco, Safaricom in Kenya has also a partnership with a solar panel company. There is an easy way. They need to collect in rural area using mobile money. They also need the brand, like the strength of the brand of the telco to grow the trust and so on from the villager. They need SMS, they need connectivity. So this is a typical example where collection partnerships could also come with like co-branding, agreement on the toll-free number, on like all the communication side of a business. But I would say they are rare, right? It takes a lot of time and investment to build those complex partnership, kind of partnership.
And I think
I would not say it's an easy one that MTN can roll out in a few weeks with a fintech. Yeah. No, I would not say that. I think we are not yet there from an organization to be able to like do at scale this kind of big deals.
Yeah, makes sense. And I think, Sophia, you were touching on the partnership with Visa. We've actually got a question that's come in around whether you can also comment on not just your partnership with Visa and how you guys have thought about that commercially, but also the partnership between Visa and InterSwitch, and what's your general thought on that as well?
Oh, I don't feel qualified to comment on the partnership between them and any other partner, but I'm happy to tell you more about the partnership that we're building.
Yeah.
So sorry that I dropped off. I don't know at what point that happened, but as I was saying, we do offer, we will actually launch an open API center, but we do also build direct partnerships because we find that there's value in building that relationship and innovating on products together. And actually, some of the products that we're going to be productizing and offering as part of our open API have been developed as a result of those direct partnerships. So generally, we would start with a direct partnership with a transient company usually, and then we would see how we can productize that and offer it to the market to integrate and onboard startups really quickly. So in the case of Visa, the partnership that we have with them is a general partnership, and we're kind of offering different things or developing different things to different segments of the market and different countries. So we've launched in Ghana already, and what we have in Ghana with them is a virtual Visa card that anyone can get and sign up to immediately, and then they can actually earn cash back by spending using that card online, including on international websites. So I think that it's definitely part of Visa's plan to try and integrate and partner with as many companies as possible, and we're one of them. And having these different use cases with Visa also enables us to offer access to them to our partners.
Awesome, thank you. I'm going to take one other question. I think this is going to be directed towards John, but we've got a question around whether you can maybe discuss your thoughts in general around open banking, and whether you foresee that sort of open banking play working really well in a place like Nigeria or wider Africa.
Thank you, Ruby. So the only problem I've had with open banking, it's a good idea. The idea that you can connect with financial services companies and get data and use that data to serve, other customers and offer a different set of products that the banks themselves cannot offer. We started one in Nigeria a couple years back. The challenge you are looking at with open banking is, I feel like lots of banks, they've not gotten to the level where they are okay with being a platform. And I like that kind of energy, to be honest, if that's the way they want to go about the strategy. I feel like lots of them, and that's the challenge with going live with open banking. Lots of them still want to offer those services, and when people connect to their open APIs, I feel like there's some sort of resistance for people to offer those same services to consumers. But there's progress being made. In the next couple of months, I believe more banks are going to go live, just like EcoBank has. Also, you are seeing some bankers also engage tech companies to help them build out their open banking APIs. It's a good idea. If you've seen the magic that, the UK having the open banking system, if you see the magic it's done to the ecosystem, I feel like we need it in Nigeria. Outside Nigeria is a very different context, because I feel like in some countries, financial services companies, fintech companies like MTN and Safaricom, they are the financial services quote unquote de facto leaders in those markets. And I feel like open banking is going to be led by the telcos outside Nigeria, because they are the ones that offer banking services to people anyway. Now, the very interesting part is you're also seeing companies like Okra, Mono, a couple of my friends doing really impressive stuff with, these third-party pledge-like systems. And so, we can only fight the future. It's going to come. Whether we like it, whether we accept it willingly, or, we defend it, but it's coming. you defend against it rather, but it's coming.
All right, thank you. So winter is coming. All right, so guys, I know you guys are in the audience. Please, 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 if you've got any questions, this is your time to ask them. I'm gonna take a couple more before we end up wrapping up. So I think this is more broadly, anyone from the panel can kind of take this, but what external industries do you guys see outside of fintech? Sorry, what external industries do you see fintech potentially partnering with in the future? So beyond telcos and beyond banks, where else do you feel there may be a fintech play? And I guess, Elsa, you mentioned solar energy as an example. Do you guys have any other kind of areas of expansion?
Yeah, so can I take that one? So, so what other areas can fintech, what was the question again? What other areas can fintech expand to? So basically, I think that any industry that currently exists offline can be digitized, and any industry that where payments is involved can be monetized using fintech if it is digitized. So if you look at the way that people are currently spending their money, you know, on transport, on food, on education expenses, anything that requires money can be something that fintech plugs into. And so in our case at PalmPay, the way that we're thinking about this is we're going to be rolling out an ecosystem both inside the app, but also outside the app. So PalmPay should be something that you should be able to use in your daily lives. And that can, if you imagine like a normal day of a use of PalmPay, that can include someone paying for their ride share or paying for their bus, ordering their food with PalmPay. Any kind of interaction that you have that involves money can actually involve fintech. But I think that it's the job of the fintech companies to try and enable that and to create an environment through partnerships, through open APIs and other things that we've discussed in order to help digitize some of those industries.
Okay. On my side, I think the next big move or like really like groundbreaking type of partnership will be instant messaging, right? Who will be the fintech that will sign the deal with WhatsApp? Will it be like an African player that will actually build an efficient instant messaging that will embed fintech service that address most specifically the needs of the continent? I see it as the most amazing strategic question for the next few years that is in front of us.
If I may point out really quickly, I believe almost every company will offer financial service, just like the telcos learned from the banks in the past decade and quickly moved. You're going to see Coca-Cola, you're going to see Shell, and all these people, you know, because they touch millions of people daily with their products, either directly or indirectly. I feel like Coca-Cola, if they're tracking data on me since the day I've been taking it, they'll probably know more about me now, and they can probably finance my house. So what you're going to see more is FMCGs going to, you know, offer full-fledged financial services to people within their value chain. And that's what's going to even make financial services more widespread. Because there's a limit to what we can build at Wallet. We are building, and I assure you we are building a lot. There's a limit to what we can build. And those people will take over from all those places.
Okay.
Sorry,
I think Sophia summarized it well. Any industry that where payment is involved is definitely a good one to partner with fintechs, definitely. And all of them actually by some ways involved with payment. And I think my colleagues in the panels put it on the right pace on you know, what would be next, or what we see could be next. So I think that all the companies, as John was saying, the likes of Coca-Cola, I would say the companies that have data, the one that, what we call the big techs. And I strongly believe that they are already thinking about it. They already have their strategies. Most of them are coming from the US for now. We don't see anyone yet in Africa, with such big amounts of information, but they all understand that all the data that they are collecting could be very good ways for them to provide new financial services to customers. So we saw what Facebook did in Brazil and what they're trying to do in India. And I strongly believe that they probably have a strategy for Africa. So I'm curious on knowing, what would be next. But I agree with Elsa. WhatsApp is definitely a platform that we need to look at. And it's when Aaron can testify, the two winners of our FinTech Challenge actually are providing solutions that are enabling financial transaction on WhatsApp. That means a lot. So yes, big techs are definitely preparing to come to the financial world. How? We'll see. But the likes of Facebook and WhatsApp, we need to watch them and see what will come from their side.
Yeah, I'm gonna piggyback off of that as well, and just this is sort of another couple of questions that we've received. How do you guys foresee fintech companies expanding into areas like healthcare and insurance? So how do we think about insurance penetration across Africa? And how does that kind of marry up with some of the fintech companies that we see taking off that are typically wallets or payments? Anyone want to take that question?
So I believe that I personally know a few companies that are already in that space, especially insurance. Okay, trying to enable insurance to the remote area people, those people that are quite excluded from the financial world. And we see good progress happening. The work still need to happen. And I believe that all the stakeholders needs to be involved, either both the financial world, but also the healthcare world, and of course the insurance. For that one, I was quite interested on seeing companies, coming with very low level of entry for the African population to be able, to get insured and get security on that side. So I see some interesting experience happening in East Africa. I believe there's also something happening in West Africa from Ghana. So I believe it's an area that could bring a lot of value to the African population and could be a very good opportunity for many industries that are in the companies that are in that space.
Awesome. Thank you so much. Sophia, did you have anything to add there?
I wanted to add to that. I think that insurance is obviously a very important financial service, but the uptake in African countries is still very low. It's like sub 2%. And maybe it as a product, it's something that's difficult to sell. So in terms of how do we increase that penetration, we may need to get creative. And Jiba mentioned Ghana, like there's an example of a telco in Ghana, I think it was Tigo, that managed to get 1 million subscribers to life insurance, paying subscribers to life insurance within a year. And the way that they did that is that they offered that as a free add-on for loyal customers of their telco services. So it drove both things. It got them people that kept coming back because they wanted to maintain that insurance benefit. And they could also then upsell those people to a higher plan. So maybe we need to get creative in the approaches that we take.
Yeah, I was coming to quote that that product. So indeed, MTN is also doing the same thing than Tigo. So it's a premium product. So every time you recharge, you actually pay a bit for your premium. And so I think that's I think an interesting, again, convergence area between the fintech side of the telco and other financial service provider. Else health is a different, I think it's a different animal. I don't know, outside of the payment, right? Paying for your health, health services and so on using a digital channel. I've not seen too much like really groundbreaking convergence or application that is really changing the access to health services. Maybe with videos, remote, actually fully remote consultation and so on, more will happen, but maybe there's much more to do in this specific sub-industry.
Yeah, super, super interesting, guys. And I need to wrap up here, but I think there's some kind of fantastic thoughts and lessons learned, and amazing to hear some of the experiences. It seems like in order for us to kind of recover out of not just COVID, but also for us to kind of push market forces forward and keep kind of innovating, I think the relationship between, I guess, corporates and startups, there's clearly a benefit on both sides. It kind of helps us collectively go to market faster, get access to new technologies. Some of the things that I heard is, we're building things like marketplaces, which enable faster access to innovation, also allowing startups to distribute faster. And it seems like, everyone doesn't need to do everything themselves, right? Which I think is a good lesson to take away. And then lastly, it seems like I loved what John was saying around, any company that is obviously transacting, or John and Sophia, any company that's got payments and transactions has the ability to become a partner or to become a fintech. So super, super interesting discussion here. I think, Nossa, I'm going to hand it back to you, but I'd like to thank the panelists one more time. Thank you again for taking the time out to the audience. And Nossa, I guess we're ready for our next session.
Yeah. Thank you so much, Ruby, and thank you to all the panelists. I think this was truly a powerhouse session. So much to learn. I hope the fintechs in the room were taking notes. And also, I think for corporates, you also I think my favorite line, winter is coming. So you need to be ready. Fantastic, great to hear this awesome panel. So we will have a prompt now. If you would like to connect with the GreenHouse team, attendees or anyone on the session, we'll have a prompt right now. So just indicate by saying yes. Can we have that poll, that prompt? So just very quickly so that the GreenHouse team can reach out to you. I think I'll give another 5 seconds. Okay. All right. Thank you very much. Okay, we're good. All right. So before we move to the next panel, we have one more poll with our insights partner, Brighter Bridges. And this poll is basically going to tie into what we just heard on the other session. So can we have the next poll? And like I mentioned, these insights will all be shared to you in very nice infographics. So we invite you to be part of this co-creation process. We just take advantage of all of us in the room and be able to get some really deep insights that will be useful to us all. So we have 2 questions. One is, digitization brings about structural and behavioral change. To what extent are fintechs positioned to play a more central role in main sectors? So let's have your thoughts on that. And for the second question, this is for corporates. What is your go-to approach when it comes to accessing new solutions? So we want to have a sense of the corporates in the room. What is your preferred approach? I think this is a great opportunity to have a good sense. We're just going to go through that very quickly because it's just 2 questions. And we will end this in a few seconds. Okay. Thank you all so much. All right, so we'll now move to our next panel. So our next panel is titled Fintech Innovations for the Digital Generation. Being a member of the digital generation, I am so looking forward to this. And I call on the moderator for today, who is Aaron Fu of the Catalyst Fund. Aaron, over to you.
Thanks, Nossa. Really excited to be nearly wrapping up day 2 with this panel. As Nossa mentioned, we're diving into fintech innovations for the digital generation. I promise you this is not a panel that will just talk about neobanks and beautiful user interfaces. At the Catalyst Fund, obviously we see the digital generation as really one that a lot of our startups and a lot of our portfolios are working on. But they represent a very, very interesting target group because they're mobile first, digital first, and in many ways they are very, very appealing. However, because of the nature of their work, many of them these days are lacking full-time employment. Therefore, they also lack access to traditional benefits. And therefore, that makes them also in some ways difficult to serve. But there has been a lot of innovation around how we serve them. So if we think about Kariwise, or Razak is joining us today, around how they've innovated to encourage way more Nigerians to save than ever before, as well as Badal at Karma Life, who are innovating a little bit more on the back end, right? So thinking about leveraging alternative data sources, linkages to employers, how we can use a lot of the rich data that the digital generation is creating to provide better financial services for them, as well as Smita, who through a career at Flourish and Omidyar has invested and backed a lot of these entrepreneurs as well, serving this particular audience. Before I dive any further, I would love our panelists to introduce themselves briefly. So maybe Smita, we can begin with you. Smita, are you there? Oh.
Yeah. Hi, everyone. Can you hear me, Arun?
Hear you great, Smita. Loud and clear.
Hi, I'm Smita, joining you all from Mumbai. It's a real pleasure to be here, and my compliments to the Catalyst Fund for this wonderful curation. As an early stage investor, I work closely with fintech startups across Asia. I've also been a banker and a regulator in my previous roles, and I'm passionate about tech-driven innovation that can drive improvement in economic lives of our communities. So I'm delighted to be here and to learn as much as contribute to the discussion.
Great, thanks, Smita. Badal, over to you.
Hi, everybody. I'm Badal Malik. It's a pleasure to be here. I'm joining you from New Delhi. I am one of the co-founders and look after business for Karma Life, which is a financial resilience platform for digital gig workers that we launched in January. So still pretty early on in the process, but we're learning a lot and hope to share some of those learnings with you and learn from my panelists and from the audience. Thank you.
Great, thanks, Badal. And last but certainly not least, this is after all a Nigeria-based event. So Razak, the home founder, over to you.
Yeah, hello. My name is Razak Ahmed. I'm the CEO and co-founder of Kariwise, based in Lagos, Nigeria. Kariwise is a digital platform enabling access to savings and investment products for Nigerians and ultimately across Africa. And I'm really, really excited to be on this panel. Yeah.
Great, awesome. Thanks, Razak. Okay, maybe to kick us off, Smita, you can take us through a little bit of what you see as the trends and opportunities that exist in sort of serving this digital generation, whether that's gig or informal employment. Would love to hear more of that because really great to have your global experience here. Catalyst Fund, as you know, is also based in India as well as in Africa as well as in Latin America. So very excited to be on this panel and sort of like share more global experience. So maybe you can kick us off with a little bit of that.
Thank you so much. And clearly the world has gone through a lot over the last few months. In fact, we seem to be in a new world altogether, which is digital by default. And what's very interesting, as we all know, this transition to digital is happening not driven by incentives or cashbacks or digital literacy drive. While the trigger for this rapid transition may have been the pandemic, it's self-driven, it's self-motivated, and it's need-based, and therefore likely to be sustained. Users who have been most resistant to change are now being seen to adopt new behaviors. Certainly in Asia, the biggest transformation and the opportunity category that we see is the small business owners. This is a very big segment in most emerging markets, comprising hundreds of millions of people across multiple countries, but they have been largely excluded from the formal economy. The digitization of this segment has accelerated, and that is making them more visible and accessible. These small merchants have multiple needs. They could, it's about sourcing supplies, tracking sales and receivables, remote collection and payments, credit, savings, and they are all now hungry to go digital. So that's one big opportunity and a big transformation. And there are lots of new business models that are catering specifically to the needs of the small business owners. Women is the other segment. Women, as we all know, that due to social and cultural barriers, most women stay away from traditional workforce participation. But the digital world has actually opened up a whole range of new opportunities for women. Social commerce apps that equip women to become online sellers and earn money with the flexibility of operating from their home have seen a huge surge in markets like India, Bangladesh, Indonesia. This has encouraged women to become home-based entrepreneurs and are initiated into using digital payments for their business and access credit. The other segment, as we all know, which is an important pillar of any digital economy, are the gig workers, the ride-hailing folks, technicians, delivery and logistics. This segment, unfortunately, has been hugely impacted and saw a dramatic drop in their earnings due to the pandemic. And because of the restrictions on mobility and all the lockdown restrictions multiple countries enforced. However, their importance cannot be overemphasized, and their incomes hopefully will rise again as economic activity gains momentum. Many of them actually do multiple jobs and are adept at taking on-demand work. One of the biggest things that the pandemic has actually exposed is the vulnerability of this customer segment. Even most of them, even when they were earning well, have not been able to maintain and build a cushion for themselves and their families. And that is what I think is a big opportunity for fintechs to work with them on. Overall, I think remote working is increasingly here to stay. Physical location does not matter anymore. And now it's not just work from home, it's work from hometown. And then that opens up actually completely new range of possibilities and income generating ability of people in the rural areas. I would like to say that actually, given all of these different customer segments and the impact this has had on them, the big opportunity for fintechs and financial service providers is really to explore new customer segments who you thought were unreachable, and you should uncover their needs and find ways of addressing those unmet needs. Supply chains are being completely disrupted, as we have all seen happen, where customers in the old format, we had large format stores, customers would come to buy, and now it's the reverse. Customers are at home and goods and services are being offered at their doorstep. So the world has actually just turned around completely, which is a huge opportunity as well. Cost structures have undergone a huge change, and so are the revenue models. I think what's really important is to be able to build win-win models, which means where you are making money, where you don't make money off your customers, but make money with your customers, and that I think is a real opportunity available. And finally, I think, increasingly we're going to be finding finance to be embedded in real economy use cases, and that the whole version of finance plus commerce, finance plus education, finance plus health. I think we're increasingly going to see finance being embedded in multiple other use cases. I think there's been a lot of pain that everybody has gone through because of the pandemic, but there is silver lining that we are seeing that hopefully should make this place much better, and many people should be able to emerge stronger out of this as you kind of pick up these cues and pick up the changes in behavior. And the biggest change is really the acceleration of the digital adoption.
Wow. So thanks for giving us such a broad overview. So I think certainly gig workers, women, as well as small businesses seem to be massive populations which are shifting in terms of digital adoption. I want to go to Razak and then to Badal. So Razak, thinking a little bit about the segment that you serve, certainly like it's much broader, and I wonder if you are seeing sort of like big shifts in terms of adoption rates of digital savings.
Yeah, thank you, Aaron. Yeah, we serve a relatively broader spectrum of population beyond just the gig workers, and more importantly, the stable salary earners, which constitutes a substantial part of the market that we serve at this point. But what we have seen in terms of the mega trends that are happening are more importantly, adoption of digital services generally. And that adoption has been driven largely by the growth we have seen in the infrastructure that supports such adoption. For example, looking at the number of digital payments that has happened based on NIPS data in Nigeria is just something that will wow anybody's mind anywhere in the world. And we've seen that the number of checks that corporates even issue in Nigeria have declined drastically. So there is that mega trend that is happening. And with that happening, there has been increasing involvement of a lot of people when it comes to digital lifestyle. So a lot of people have embedded themselves into digital lifestyle, from work to transportation to food ordering. So the general lifestyle is changing into the digital space. And when those decisions, life decisions have been made, there is money involved, right? When you're buying food, there is money involved. When you're ordering transportation, there is money involved. So whenever there is money involved, there is that opportunity to make financial decisions. And when financial decisions are involved, then it means that there is a huge opportunity for financial service providers to help people make smart decisions that will not only help them improve the value from what they spend, but also ensure that they have a better future for themselves. And that's the kind of trend we're seeing right now. And based on current data, for example, the smartphone penetration in Nigeria is just about 22 million people. But that might look extremely small relative to the population of the country. But what matters most is, where was the country 5-10 years ago? The number was just 2 million or 3 million, but now we are 20 million. So the big picture is, where will that number be 5 years or 10 years from now? So there is always that argument around, how do we include those who currently don't have access to internet, who currently don't have access to smartphone? How do we ensure inclusive development or inclusive financial position for them? And the solution is not to build a solution that will address their past position, because we continuously see increase in the number of people that are using smartphones. We continuously see increase in the number of people that are using the internet, right? So that.
Oh, we might have lost Razak for a little bit. As he comes back, maybe Badal would love to come to you. So you clearly serve gig workers, and obviously Smita mentioned that one of the things that they've been really hit hard with through the pandemic is like they really have no cushion, and it seems like through Karma Life you are trying to build that cushion for them. I want to switch gears a little bit to think a little bit about the how we're able to deliver services to them. Right, because one thing around like why credit for them has been so expensive is really around the lack of data around these profiles. But I'm also curious as to like, one big part of your value proposition is also from a pricing point of view. You're pricing a lot less than other competitors that are out there. Do you see that as sort of like the primary competitive mechanism that where you are addressing this audience, or is there sort of like other secrets that you've learned around how to build something for gig workers?
Sure. Okay. So yeah, no, I think Smita introduced the digital gig and some of the pain points, particularly in the face of COVID, quite well. And so just building on that, right? I mean, the digital gig sector. I mean, this is a segment that is the fastest growing segment in India, I mean, they are vulnerable and deeply underserved primarily because of their unique work and movement patterns, right? So they do not have permanent or formal employment. They do not have consistent incomes. Their location patterns are unique because many of them are migrants. They go back and forth between hometowns and urban centers, urban job centers, so on and so forth. So when you take a traditional finance lens in terms of understanding, underwriting, predicting, etc., that just doesn't work, which is why there is a gap. So the way we see it is that, and by the way, these are mind you, these are folks who are generating cash and they're spending on goods and services in the economy, right? I mean, they're spending over $20 billion a year in India. So it really comes down to a data problem, right? Risk is real time; it's hard to capture. And at the end of the day, this is a dynamic data problem which we are, keen to solve. The way we do it is that so we are working with gig workers in the construct of the platforms that they are working with, and we collect. So they are the good news. There is that because they're digital gig workers, they are tech savvy, they have smartphones, they have workflows that are digitized compared to traditional gig workers. As you know, India has, informal work in India, which is really gig work, has been around for donkey's years. But we get data from the work platform, which is essentially their work, kind of performance and work patterns. We get data from the mobile phone, which generates, the mobile phone has 14 sensors. There is a trove of detailed information from calling patterns to location patterns to non-personal SMS, etc. And then we have also built our product as a digital line of credit over the UPI stack. The UPI, as you know, is a debit product in India, but we've converted that into a credit product. And so we intermediate the payments. We enable kind of payments directly from a virtual account that we provide the gig workers, and we intermediate those payments. So we're able to essentially underwrite at both an individual level as well as a transaction level. And that allows us to, kind of just get a much better read on the worker and be able to provide services. Now that, I think fundamentally from a vision standpoint and from a needs standpoint, these guys need a range of financial services, right? It's not just about credit, and we don't see ourselves as a credit company. We're not positioned that way. We are really building a mechanism for them to use finance to drive resilience, number one, and to unlock their aspirations. And that is diversified finance, right? And that includes sustainable credit as one component of many. But there is also, they want favorable access to goods and services. They want career progression, right? They want, many of them see this as a means to an end. This is not, these are not jobs that, they necessarily want to be doing, years from now. So how do you kind of help them through finance address those larger, those larger aspirations? Now, at a very macro, granular and now kind of perspective, what we have done is we are, we're really making small ticket finance in a very flexible, dynamic way that is data-driven, viable for them, right? So we're talking about loans, a line of credit, first of all, which is different from a term loan. It has the flexibility of using it when you need it, right? So it's a much more flexible and a more relevant product, we believe, for this segment in particular. And it has, for for small entrepreneurs, it has a working capital use case. For a delivery worker, or a salary type worker, it has more of a kind of a household expenditure and salary advance type of use case. But I mean, the way we built it is it's small ticket. Our line of credit is as small as 500 rupees a week, right? And price is certainly one of those factors, because we just believe, I mean, the way we built it, and with the flexibility that UPI and data provides, I mean, we just saw a huge arena to play on price. But I think it goes much more than price. I think it goes to trust, it goes to speed and convenience, it goes to a sense of simplicity. It speaks to an ability to be self-sufficient and independent, and ultimately getting the job done for them, right? I mean, I think that is one of the most important pieces that these folks look for. They just want a simple way to get the job done.
That makes a lot of sense. I want to shift to Smita a little bit. To maybe you can also share some of like the best practices you've seen in terms of how have startups won when it comes to addressing this customer segment. Like, what have you seen them do? What are some important factors as startups look to address this segment and build for this segment?
Yeah, so I think the starting point for startups to be successful is to actually be very focused on the customer segment and understanding their pain points and understanding their unmet needs. So for example, the gig workers, more than long-term credit, what they are really constrained for is short-term liquidity. And that is, as Badal mentioned, it could be, as low as $60–70, and that could make a huge difference in their ability to earn reliably. I think many of us don't realize that for a gig worker, they need to spend first to be able to earn income. You need to have fuel in your car to be able to accept the new ride that's coming through. You need to have your supplies in place if you are a beautician offering home services. And so there is a working capital constraint that the gig workers work through. And that is not very well understood. And it's about meeting and understanding their cash flow patterns, understanding their needs, and then finding a very relevant and contextual solution. I think the other thing that works very well is when you have the income, most gig workers actually work across different platforms, to be able to optimize their earnings. So if there are solutions and apps that could actually aggregate, can help them aggregate their income sources from multiple platforms, that could be something quite powerful for them. Similarly, with the small business owners, shifting gears to that profile, we have seen, people offering solutions which are mimicking the mental models that the small retailer follows. Most often, the small retailer is a one-man show, and the person is always starved of time because there's a constant stream of customers coming through, and any process that requires him or her to step away from the business and do something outside of his normal process flow becomes extremely cumbersome. So paying attention to details like this can make a huge difference in driving the uptake of the solution.
That makes a lot of sense, Peter. And yeah, we've been really lucky to work with Razak a lot through understanding his users and his journey too. So I wonder if Razak, you want to share a little bit about how customer centricity is embedded in Kariwise and what you've learned along the way. Because I know your business has sort of moved from being very investment product focused to now also having savings products and now also a wallet. And so we'd love to sort of hear how you've embedded customer centricity and how that has guided your journey so far.
Yeah, so I think that's actually That's actually quite important, and it defines the product's roadmap over time as a company. And when we started out with just primarily savings products. And down the line, we started having a lot of feedbacks from customers in terms of what other services or features they would like to have on the platform. So being focused on customer is about focusing on what the customers actually need and making sure that you develop a product around the core product that actually serves those customers' needs. And for the wallet products as well, what we did was primarily to respond to customers' constant issues around reliability of card payments. The reliability of card payment, the security around card payment, especially for online transactions, and the amount of trust issues that we have around people being comfortable using their cards online. And that was what informed the development of the wallet system. So for the wallet system, it is card independent, and users can easily make transfers from any bank in Nigeria into the wallet, and the wallet then serves as a feeder system for the savings and the investment product. So being customer-centric is about meeting customer needs at every step of the way, being receptive enough to have customers' feedbacks being taken into consideration. And that is also one important area when it comes to customer journey, giving the customers the opportunity to give feedback. Because when you have large number of customers, thousands of customers, not all of them will find it extremely easy or comfortable to give you feedback directly. But the system must have a nudging system that automatically give customers the opportunity to give that feedback. So in building in that system of feedback mechanism is actually very important to measure customers' pulse, to get their feedback, and to redefine the overall value proposition that the product offers. So in our case, it has always been that system that we built that allows us to harvest customer feedbacks and refine the products over time.
That makes sense. So I guess like customer centricity not only embedded in the organization and the culture, but also in the app itself, right? Like it's this mechanism that constantly gathers that feedback, which I think is really, really important. But I know it's really early days with Karma Life, but I'm curious as to, but you've already had some incredible large pilots with some of the biggest sort of brands and partners out there in India. I wonder if there's anything you've learned from your customers in this short period of time that have informed any kind of pivots or changes to your model or how you're approaching them.
Yeah, no, it has been early days. So we have done, we did a range of experiments, and we're still kind of doing experiments, and we're working with 3 or 4 platforms at the moment, with the lockdown in between. So it's been an interesting 6 months. But yeah, no, I mean, we've learned a hell of a lot, and just some learnings. It'll probably take a long time to walk you through all of them, but a few of them. One is, one thing that has been pretty striking to us is that there is no longitudinal data available on these folks. Even the platforms that hire them, or they don't hire them directly, they hire them through manpower agencies, etc. But there is no, even they don't have data on the track record of the history, or so when somebody leaves, right, it's almost as they all of a sudden just go into either space, and there is no continuity there. So that's an opportunity for us. The other part is that we like I said, we built on UPI. We did a pilot in January, with Flipkart, and we did this across 40 of their hubs, tier 1, 2, 3 cities in India. And because one of the premise of our product is that you have to be able to use it on UPI. We allow for bank transfers, but we limited those. So that's configurable. And we saw that everybody uses UPI. So the digital gig segment is probably your they're your early adopters when it comes to digital technology, right? And so that was pretty heartening to us, and it kind of was a validation in that sense. I think the other part we saw is the role of trust. So apart from the fact that they're unique work and location patterns that I mentioned, that at the end of the day is a data issue, right? It's not, it's endemic to who they are and their patterns. It's not, you know, some freak show. It is, if you build a product that really generates value, then you see, you know, positive intent and engagement. And, you know, even just to give you an example of this, you know, we did those Flipkart pilots with about 600 people across monthly cycles for 3 months through March. And then March, you have the lockdown. And even with the lockdown, these people who, you know, were obviously, you know, they had this looming uncertainty, were so appreciative of the product that and there were people who repaid their loans themselves, even though they did not have to, right? So we went off on a platform for some of them, and they just took longer, but they did. And that was, for us, fairly eye-opening. I mean, their spend patterns are very predictable, right? It's a hand-to-mouth existence. So, I mean, whatever you get in a month, you know where it's going to be spent. So that, for us, you know, given that we're intermediating payments, allows us to kind of think of building a merchant ecosystem to enable, you know, kind of favorable access to goods and services. Maybe I should stop there. I mean, I can.
Yeah, no, that makes a lot of sense, Badal. And I think one common theme that I'm seeing coming out here is also this idea of ecosystem and this idea of aggregation that has come across, right? So I know Razak, you know, you spoke a little bit about wanting your wallet system to enable your customers to become card independent. At the same time, as part of your ecosystem, you also work with a lot of, you know, investment product houses that are providing the products for your customers too. And Badal, obviously, like, you know, when it comes to your ecosystem, you know, the aggregators and the platforms are absolutely key. I'm just wondering if anyone had any comments around, like, how important are these sort of platform partnerships to your business and to your growth? Are they sort of helping you, or are they sort of in some ways competition? How does collaboration work, and how are partnerships important or not important? I would leave it open for anyone to want to jump in.
Let me start with that. So for startups, especially startups that offer financial products, you can't, as a company, offer everything along the value chain, end to end. Like, you can't build the entire infrastructure yourself. There has to be some form of partnerships, right? And the way we see partnerships is partnerships that ensure that the startup wins and the partners also win. So it's about building a positive sum game at the end of the day, right? So in Nigeria, in the case of Nigeria, for example, we have investment management firms, fund managers who offer mutual funds, right? But the mutual fund penetration rate is extremely low. So the positive sum game comes in by ensuring that the products actually reach out to a large number of users. And that is basically increasing the pie and not necessarily sharing the small pie between the existing investment management firms and the startup. So that alignment of interest must be clear from day one to ensure that there is value creation for both parties. If the alignment of interest is not there, then there will be issues with the partnership along the line. And again, the other thing about partnership is knowing what exactly you want to get out of it from the beginning. I remember when we started and when we wanted to launch publicly, one of the existing fund managers that we reached out to for potential partnership actually asked us for something completely different from our vision. And that was, they wanted to like get CowryWise and label it as a product of the company, but powered by CowryWise. That basically takes out the power and the opportunity to build something that we would envision. But we declined that and went ahead with a different partner entirely. So knowing exactly what you want to achieve from the partnership from day one is very critical, and aligning the interest of your company as a startup and the interest of the partner is also very critical. So it has to be a win-win situation, and the pie needs to be bigger by the combined entity generally.
Yeah. No, makes a lot of sense, Razak. And Badal, I would love to hear your perspective on partners, right? Because at the same time, you know, you're trying to build sort of more longitudinal like visibility for the worker as they move from like platform to platform. Is that what the platforms want? Because I mean, I'm sure the platforms also want them to be relatively sticky to just them. How is that interaction sort of been?
Yeah, so for us, you know, I mean, well, there are two parts to this two parts to my answer. One is that we look at partnerships a bit broader, and then yes, I mean, right now where we are, platform aggregator or employer platforms are key. So let me start with the first. So I mean, if I think of it from a from a user-centric standpoint, for a digital gig worker and how we want to service them, we see three types of partners, right? There's a trifecta of the platform/employer, where it's really about, from our standpoint, we get access to work data, we get a distribution channel, we have mechanisms to operate, to reduce risk. So for example, even today with our line of credit, our repayment is coming from the platform payout. So the platform pays us, right, on a weekly or a monthly or whatever the payment cycle would be. So that, and on what they get is, retention, productivity, inclusion for a workforce that is, fairly strategic to their customer experience. But beyond platforms, there is also, financial institutions who are, we're not lending on our balance sheet. Tomorrow we do insurance. We're not going to be, a manufacturer. So from a regulatory compliance standpoint, there are, financial institutions that have products that we can, tailor and provide in context. I mean, given the gig segment, we can offer them a large user base with less risk and better user insights, etc. And then the third piece, which is what I alluded to earlier, which is around the commerce in this, right? So there are a set of merchants and vendors that provide relevant goods and services. And this is, you can think of, just your traditional kind of retail vendors, but also things like, more resilience and fundamental health related. So whether it's healthcare provision, or telemedicine, or vocational training, which are both products that are extremely relevant to digital gig workers who are, in their kind of line of work and their, work patterns. But that again, is an opportunity for us to get in, and because we also, we do have a subscription-based model. So that gives us some flexibility to be able to, bundle those subscriptions, right, with some of these services. And we're still, very early on along that journey, but the idea is to provide a comprehensive kind of a value oriented solution. One point with the merchants as well is that, from a compliance standpoint, we are getting into like one of the risks that we see going forward is regulatory risk around, licensed financial entities. Now, what happens, I mean, if, we see building a merchant ecosystem as a way to potentially, diversify that risk, because merchants can also lend their balance sheet, right? And that is a very interesting way to, provide services without bearing some of the regulatory risk. From coming back to kind of the platforms. So we very much, so the long-term vision here is, like Smita also alluded to, I mean, you have, outside the 15, 20 million gig workers and growing, there are about 100 million contract workers that are in the organized sector, right? And there are another 250 million informal workers, from domestic workers to construction labor to self-employed folks, right? So the idea here is, to start with, so we follow we look at two axes, one being digital trail intensity and the other being level of organization versus fragmentation, right? And where we are playing right now is the sweet spot. But the idea is to build models, build AI, and then be able to get off the platform, right? Even with the churn that we're seeing from these platforms, because these are churn-based, they're high churn platforms, in order to kind of capture a customer lifetime value and be with a customer through their life cycle, we have to eventually move off the platform. So there is a transition, there's a dynamic element to that, but we're still very early in our journey, and we're a bit away from that.
Yeah.
If I might add one more point on the partnership issue, as investors, one of the big questions that we would always ask is, what's your moat? and how are you defending yourself from everybody else around you? And I think that question is now switched over from how are you building bridges and creating a network and plugging into the ecosystem set so that there is a synergistic growth that you can see as part of the entire ecosystem. So I think that shift of trying to do everything yourself and building a defense mechanism and a strong moat around yourself is now giving way to actually building bridges and becoming part of a network that actually has synergies and allow the whole pie to grow much faster and bigger in the interest of the consumer.
Absolutely. I think we've certainly seen a big shift towards competition to collaboration in the last couple of years for sure. I would love to quickly turn to some of the audience questions as well, as we're almost about to wrap up. I saw one that just came in from Shiro. I'm assuming from Kenya. As a startup, how do you balance the digital generation's need for community and social sharing with their need for privacy? I think certainly that's been a tough one to kind of go between. Razak, I wonder if how do you balance being able to share your savings goal and how much you've saved versus the need for privacy and sort of your personal wealth, right? And Vidal, I'm sure on your end as well. But yeah, I mean, it's open to everyone.
Yeah, I think there are a lot of people who are very secretive, let me put it that way, and they actually don't want a situation where their financial situations are known to people. And what we have seen is to enable people share their Cowrywise story in a way that is anonymous as far as the numbers are concerned. So we focus more on milestones rather than actual numbers, right? There's something in Nigeria globally called the black tax, right? When you say, okay, I have $1 million somewhere, probably in the next 5-10 minutes, you'll probably receive 1,000 DMs asking you to send money to someone, right? So people are always very private when it comes to sharing their money stories. But there is a version of that story that's, that people want to share, which is something that defines milestone broadly and not necessarily specific amount. So for example, we've also received feedback from users who, for example, are referring the platform to their friends and showing their friends how Cowrywise works, but they don't want that friend to see their balance. So they're asking that we should put out a feature that allows them to hide their balance while they show their friends how the product. So you begin to wonder how people attach so much importance to privacy. But again, what we do is we look at what people say and also look at what people do. And when there is a match, then we take action. But when people say is different from what they do, then most importantly, we go with what they actually do.
That's a quotable quote. That makes a lot of sense. Badal, what are you seeing on your end in terms of balancing privacy and sharing? I don't think people are sharing that. I just took a loan of X.
Well, I mean, we are not seeing. I mean, I'm trying to think where if there's a if we've seen a trade-off. I don't think we have, but we are obviously we are concerned about both, right? So on the privacy side, we are I mean, like with most underserved populations in India, privacy can sometimes be an afterthought because the need is so voracious. But we are, at our end, trying, because we are a database platform to begin with, but we're trying to, follow all the protocols around informed consent and, proper use of data and confidentiality and data security and so on and so forth. So that's that. On the social side, I think there is, again, a huge opportunity here. And we're actually, so we are, some of the innovation that we're doing is to leverage this. So for example, I mean, if you look at digital gig, because, I mean, there are different use cases, but a lot of digital gig workers, like say delivery workers, they work out of hubs, right? So there is a camaraderie, there is a peer group, and we've seen that a lot of this kind of cash crunch towards the end of the month before the payout, right, is, there is a lot of borrowing, peer-to-peer borrowing, right? So one of the things and we've also seen based on our experiments is this line of credit that we've offered. I mean, different people, the utilization of it varies by person and by time. So, what we're actually we're doing some experimentation around a social lending model where that social trust, right, in terms of, so if I want a loan, if I get my line of credit, but I want a slightly bigger loan, I can go to two of my buddies or two of my peers and get, get them to share or extend a part of their credit line for that particular period. And, then, that becomes a more kind of EMI-like loan. And, so they become social guarantors, right? And we can digitize this and enable it in a very efficient, transparent way. And that, again, is a way to deal with, a different kind of liquidity issue or liquidity need, but without kind of infusing additional capital into the ecosystem, right?
Yeah.
So it's I mean, so we're, that's one kind of interesting way we're thinking of social.
Yeah, makes sense. And I feel like the next question from Dan is something that you might have already answered, Badal, but he was asking about how does Karma Life source alternative data for credit risk assessment, which I think you've touched on a number of times already. But I guess I'm also curious a little bit about, why would these platforms want to share their data with you, and how free has that kind of been? Because I think they can be quite protective sometimes.
Yeah. So, I mean, I think that's an interesting question. I think, my sense is, I mean, and, we learn as we go along. I'm sure there's more to learn on this, but I think, one, they're not doing much with their data, right? So it's lying there and they're using it, or at least not for this, right? It's not, I mean, financial resilience, financial services, even credit is not, their core product. And to, I think to deliver it right, again, we're talking about small ticket finance, flexible, small ticket, affordable finance now, and diversified finance, right? I mean, to do it in that way, it's not easy, right? It's not easy. I mean, it's not, Uber won't do this, Flipkart won't do this. So I think, that is another piece. And I think it fundamentally comes back to an understanding of the fact, or an appreciation of the fact that if these folks are more financially, kind of secure and resilient, then that has knock-on effects on productivity, on retention. In fact, in the US, there are studies that have shown that there are 30% gains in retention when it comes to salary-linked, fintech. So, I mean, in India, we don't have those studies at the moment, but I mean, hopefully we will generate some of that data through, the platform. But I think it is there. And on the data question, I just would add, apart from the, the sources that I mentioned, I mean, there is also, I mean, we're vultures, to any kind of public utility, data utility that is coming out. So account aggregator, PCR, which is, alternative data, including utility records, bill payment records, etc. So we have we built a entirely digital stack. It's an entirely, digital workflow from a user standpoint, which also helps us kind of, reduce the cost, and also is one of the factors behind the affordability. But yeah, we have a modular backend infrastructure as well, which can plug into anything. So right now we focus on those three sources, and the weightage right now is different. It's more skewed towards the platform, but that will certainly change as we go.
Yeah. Makes a lot of sense. So like, key data comes in from the platform and bolstered by other data that you're able to find on an ad hoc basis on the rest of them. Makes a lot of sense. Smita, we have one for you from someone who's anonymous. As an investor, where do you see the big opportunities in fintech in the next few years, especially coming out of COVID? And I think that's a great segue into Badal and Razak. I'll come to you afterwards as well in terms of where you see the biggest opportunities. But Smita, I would love to start with you.
Sure. So I think there are lots of opportunities because there is increased digitization that's happening. I would just point out a few. So first, I think, combining fintech and or rather financial services products with income generation, I think that's one big opportunity. And let me give you some examples of what I mean by that. So if you look at the gig worker, I think having, one of the biggest concerns for the gig worker is finding enough having enough jobs to be able to earn sustainably. What they need is to be able to be occupied 100% of their time, and therefore they need to keep finding jobs. So if you if you can combine the the income generation capability and the app to find the job along with then giving them credit and giving them options to how to tuck away money and save money when you have some surplus, and offer them an insurance, that then becomes a very powerful proposition, which is combining income generation with the financial products to manage that income. Similarly, if you see for the example that I gave for women, most women end up being financially excluded because they are not primary income generators. And therefore, if you have solutions which are, helping them generate income, and that's what the social commerce opportunity has shown, that make them an entrepreneur, give them the tools to actually become a digital entrepreneur, and then their uptake on financial services automatically takes off. So I think fintechs need to kind of just work a little bit more broadly into income generation plus financial services kind of an approach. That's point number one. I think that's the big opportunity. The second big opportunity is really, embedding yourself with the big tech players. As I said earlier, it's all about collaboration rather than competing with each other. So rather than fearing the big techs of what's going to happen and what they will do, I think the big opportunity is to actually partner with them and get embedded to to be able to access the huge customer base and the customer engagement that they have. So that, I think, is you need to be creative as to what is it that you can offer so that you can drive the same level of engagement that some of the tech solutions have, and bringing out gamification in financial services, embedding yourself in the big tech. I think is a big opportunity. Lastly, I think doing anything which is the monetization models. I think that has to change in terms of the monetization should be based on how much value have you added to your customer. As the customer earns more or saves more, you then take a small piece out of it rather than you being a cost center for the customer. So that I think makes you to be a very positive value accretor in the life of the customer.
Yeah, that makes a lot of sense to me there. Razak, I would love to go over to you in terms of where you see the opportunities, because as Smita was sort of taking us through the opportunities, I was envisioning, Cowrywise being like a job-seeking platform for people. After you saved $1,000, will help you connect with employers to save more.
As Smita mentioned, she had already made a fantastic submission really around where the opportunities lie. But one thing I would just like to add briefly is opportunities that allow people to build financial resilience is actually very, very key at this moment. I think in our lifetime, we've seen situations where issues like COVID happen, and in January, nobody in its right mind will have envisaged that COVID will happen with the impact it has had on the global economy. So in the next 5 months, when you say something like that will happen in 6 months, people will take you seriously, even though chances of that happening might be very slim. But because it has happened before, there is that happening possibility in their consciousness. So, and we've seen situations where a lot of people fell victim because they don't have enough financial muscle to weather the storm during COVID. So any opportunity that embeds digital lifestyle into helping people build financial resilience is actually something a lot of people are finding extremely important at the moment. And we're at the heart of that.
Absolutely. Savings is definitely at the heart of financial resilience in many, many ways. But if I could get one prediction in terms of what the biggest opportunity is post the pandemic in one sentence, what do you feel that would be? Because we are at time.
Sure. I mean, I guess I really do, agree with what Smita was saying around embedded finance. Like, I think finance has to become invisible, right? I mean, at the end of the day, it's a means to an end. The end is not, finance is not exciting. It's not, it's not exciting for us. So, it cannot possibly be exciting for, folks who have, less educated or have, less cognitive, unfortunately, potential. So I think, it's part of a trend. Like if I think about fintech and the journey, you had the unbundling of the banks where, a very stodgy kind of diversified service that was provided by banks was opened up, and you had these siloed kind of very efficient players. And then you had a bundling of, that finance back into a digital format for everybody in a very generic way. And now you're seeing, kind of a lot more niche plays at a segment level, right? And what we are doing with digital gig workers, and gig workers in general is, it's a very unique segment. That segment is unique for a lot of the reasons we've already discussed.
Yep.
And therefore, the kind of finance that they need it has to be different, right? So if you combine that embedded finance with kind of the niche segment level play, I think you're seeing the future of where this is headed.
Absolutely, and I think that nicheness definitely ties back into that user centricity as well, right? Where a lot of products right now are not designed with the specific use case of these audiences, and being able to be niche allows you to focus on just that, and then be able to design something that's just for them. Well, unfortunately, we have run out of time, guys, so I will have to hand back to Nosa. But I just want to thank Smita, Badal, Razak for incredible discussion. Thank you all for sharing your insight. Some of the biggest things that I got out of this was sort of, this shift between competition and collaboration, the seeking of sort of like win-win partnerships, not just between, startup and partners, but also between business models and customers. How do you balance that need for profitability as well as serving your needs? I think something that Razak also said stood out to me a lot, which was, around embedding that customer centricity, not just in the organization, but also in your technology and your app. Make sure that it's absolutely in there at all times. And also, I guess, the tremendous opportunity there is when it comes to being able to focus on what might otherwise have been non-traditional or not as appealing segments before. And certainly, I think with the pandemic, it seems that there's a massive opportunity to digitize the transactions of these segments in a way never seen before. They seem to be more hungry for it than ever before. So really excited at the future and what we get to build. So thanks again, Badal, Smita, Razak, and thanks to the audience for your questions. I will have to hand it back to Nosa, but thanks guys for joining us today.
Thank you, Aaron.
Thank you, Aaron.
Thank you.
Yeah. Thank you, Aaron, and thank you everyone on the panel. The point about resilience resonated with me. I don't think I've looked for as many savings and investment platforms as I have in the last few months. So thank you for all those insights. Fantastic. So that's our final panel for the day. Before we go to wrapping this up, we want to quickly get a sense of who would like to connect with the Catalyst Fund team or any of the attendees or a possible panelist on this session. So can we just have that prompt so we find out who would like to connect very quickly? If you'd like to connect, please feel free to let us know, and we will definitely be reaching out to you at the end of the event. Fantastic. Can we have that very quickly? I'll end this in 3 seconds. Okay, thank you very much. And then we will also like to get a sense, you've been with us all this time. We want to have a sense of how did you feel about this, the session so far? How have you felt about the events? Can we just have that prompt as well so we can hear from the audience? Your feedback is very important to us, Let's have a sense of how you felt. Did we carry you along? Yeah, and what are the possible areas we could also improve? So let's have a sense of that. It's just very quick. It's one question. Should take you 5 seconds to click that. Okay, I'm just going to allow a few more responses so we can have more from the room. Okay. Thank you, everyone. Thank you very much. All right, so thank you, everyone. I think a big thank you has to go out, especially to the audience. We know that there are so many webinars out there today, and I learned the phrase being webinared out, but you've stuck with us through this to listen to all our panelists and all our insights. So thank you so much for attending. A big thank you to our partners, GreenHouse Capital. They have been awesome in putting this together. So much has gone into these events, and I'm really proud of what we've been able to create. I want to say thank you to the Catalyst Fund community, our circle of investors, our circle of corporates. Thank you so much for being a part of this. We see you and we acknowledge you being here with us. And finally, to our supporters as well, DFID and JP Morgan, we are delighted to be enabled by you. Thank you for all your support and helping us on our mission. So thank you everyone for joining us. Thank you for supporting us in our mission to accelerate inclusive fintech startups across emerging markets and thereby creating practical solutions for the world's 3 billion underserved. So until next time, it's goodbye and best wishes, and do enjoy your weekend. And we will get across to you after this event. Thank you.